Morning, everyone. This is Rose. Today is Monday, March 20th, 9 a.m. Eastern Time. Doing a quick mic check. Okay, welcome. What you have in front of you is the extended trading hours, which covers all of the trading sessions of 1 hour chart, so that each bar represents 1 hour of trading. We're in a triangle. You can also draw from here if you like. That would give us a wedge, but looks like market is trying to reach this resistance area. I'm going to take that as my base. Okay. We are going sideways. We have been sideways since I believe it's the beginning of the week, but it actually started the Friday before. So market sees a trading range here, but we do have magnets up above the trend line. This early resistance and the balance zone, which is a magnet area of interest that price may want to get back to, because several occasions price went there and spent some time and did have breakdown and break up and a major breakdown from there once again. So it could be the top of the trading range, and above that we have a trading range high, so that could act as resistance as we could reach and then come back down. Right now this is 20 EMA, this is 200, so we are below the 200, but we're kind of sideways. We could easily get above it. We just need some kind of catalyst maybe once the market opens. Nothing really scheduled today as far as the news from the banking industry coming out. It's creating lots of chaos. So that's what we have at the moment. But tomorrow the FOMC meeting will begin. Okay, it's early morning. And then I believe we had some technical issues with the bond auctions last week, so they're all scheduled to this week. I think everyone's waiting for that also. That's tomorrow in the afternoon, actually 11 a.m. it's starting, I believe. And then the FOMC on Wednesday, so that's a big item as Fed's expected to raise the rates once again. And then follow through on Thursday, several jobs claims coming up 8:30, and then after that several more news that are important. And then Friday we have durable goods in the morning. James Bullard will speak, so I'm sure they're going to be talking a lot about the rates. And then the PMI composite flash 945 on Friday. So jam-packed week. Is FOMC is going to be a catalyst. Now, could we go sideways, maybe go up and get back inside this triangle or this tight trading range once again? Yes. In fact, we do now have trading range there. Yeah, I might take that as could extend it a little bit. Yeah, so that's it. This might be actually too wide. Let's see if I can do better here. Yeah, so this is the trading range in the market. Most likely to is, even if it gets above it, triangles are 50-50 breakout, 50% breakout to the upside and 50% breakout to the downside. So it could be a false breakout and then come back right back inside this area until the FOMC. So we might be ranging in this area, but we are making, we're kind of squeezing in here, so we're going to get some kind of a breakout. Now the bears might be seeing this as a 1, 2, and 3 push top, or 1, 2, and looking for another top, and a bear flag with a lower high. But again, that could still put us back inside this area. Let's see, let's go back to the daily chart. Let me change the workspace. Okay, so let's start with weekly is right here. So last week, we said that we were probably most likely in the second leg of this bear move down, okay, from February 2nd. And we have targets. December low was our target, but I said when you see something like this, generally the low of the bull bar is your target. So I had a level there, and I said, we're probably going to test this on the daily chart. And we did, but the problem here is that the continuation or the follow through was very weak. As soon as we test this area, market ended up actually closing higher. So it's slightly above its midpoint. So that's a disappointment for bears. However, bears might be seeing this as a pullback and come back down for the third push. So leg 1 pullback, leg 2 pullback, leg 3 possibly, and a testing of this moving average. But what the bears want, they want to continue this down. If this is too low, they need a pullback. So what they see here is somewhere around 4,400 to 3,700, 3,600 area as trading range. Okay, so think of this trading range midpoint there. They might be looking for a pullback and then come back all the way down. What they want is test of the October lows after breaking the December low. I don't know if they're going to be able to make that because this is a disappointment. What the bulls want is they see a wedge, okay, and they want to complete this wedge by going back up to here. So they want to test the December high, the February 2nd high. They want to break this resistance, get back above here, and possibly have, okay, a double top with August. Now, we have not broken above August. Yes, we made a higher high and then came back down here. And bears see this as the potential, okay, potential of bear flag. So they're looking for, and they might allow bulls to get back up here. Now, if the bears do not see the August 19th breakout possible, okay, if they see a failure, then they're going to believe that we are in a trading range and it could easily become a bear flag and we could come down. But the bulls, they want to get a double bottom, which is they're getting one. But it is better if they can get another one here, maybe a third push down, failure to break out, break down, and then get back up, higher low, break this, get back down, and break again. Once the bears see the August high, okay, is being breached, they might decide, and they will most likely, that this is downtrend ended, and the bulls finally take over so that we can actually go higher. But we are in a trading range. So what the bulls see also is a inverse head and shoulders, okay, with a higher low right here, and they want to get back up to this high, and they want to get a measured move, okay, there, and possibly even a much bigger measured move to the upside. So I think we're going to go sideways. Bears might try again, but I think bulls want to get back up to this trend line. So I don't know how. I think the next couple of days is going to be possibly sideways because of FOMC, and the FOMC will decide the future of the price path. Now on the daily, similar, is we've kind of finished this. I'm going to leave this down. This is a projected bear trend line. Originally, I had it like this, but I've decided I'm going to take that low. Now, we've already taken this, taken out this bull bar's low, and then we bounced from here. And this was always my support on the daily, which is fine. And we said Thursday, Friday, we said we're going to get back up to this level, which is March 2nd. We went beyond that. We're testing the moving average, but momentum is still to the downside. So if this is just a pullback, we might still need to get back above the 20 EMA and test there, maybe down, up, down, up, down, here, up, down, up, down, up. So we might need to get back here, okay, make a double top, and then come back down if this is a bear flag, right? So that could be possible, but that could still require for bulls to push the market up here. So if they're seeing this as up, down, one more time, okay, bears could still looking for some kind of a double top here, okay, or wedge top, and then we might get a lower high and then come back to this trend line. But what the bulls also see, and get rid of this, what the bulls also see this, okay, so here's one pullback, two pullback. If this is the third push, okay, they're looking for one pullback, two, okay, and then come down. So, but they might even get a third push. So this is basically target. This is my projected target for bulls, okay? But this right here is where the bulls are trying to reach. They're going to have to do a lot better. Now, what would give us a 100-point run? Right now, we are at 39.6350, which puts us right slightly below this March 2nd, okay? You guys cannot see my screen? What do you mean? I think there's only one person having an issue. But if we can get above this with bull bars, okay, so the first test, we have to test the 20 EMA above. This is a 10 SMA. I use it for momentum, okay? So once that gets above the 20, okay, we get, this is SMA, we get a momentum, bullish momentum, and that could bring us up here. But there are, I think, sellers waiting right around here, but this is where the bulls want to reach. I don't know if the FOMC could be a catalyst. Another thing with these kind of wedges, it would be best we could come back for another leg down, possible higher low in this buy zone. Okay, so that could be if we get couple of bear bars down, bears trying. Okay, they might have tried here once, even though these are bull bars. Think of this as first try, second try failed. We could finally get bulls and we could reach that area. And if we do get rejected but still able to get above this, okay, so this will be your line, which is the 50% midpoint of 2022 last year. So I think the bulls are gonna look to see if we can get a double bottom higher low, a major trend reversal, or if we start to go higher, I think the bears are waiting up here, okay, especially if you want to really measure from there to there. So if we can go up there, get back, try again, and the bears want to swing from there. So it's a little bit difficult because we're going to open up right here, 39. So we're already underneath. So it's between this trend line and this resistance that we broke once came back down. I think the market is going to try to get back above it. So that's where we are. We're going to open up inside yesterday's range somewhere here. Now, this is the R2H, so I took the last week's range, but if you had last week, okay, so last week traded, think of the prior week, we went towards the prior week's midpoint and stalled there and came back down. So now we are in a much tighter range, which is last week range. So instead of market going down as we expected, it ended up going sideways and up last week. Okay, so and it's a tight range. It's not that large, so we might actually break above it. This area above this moving average and above the moving average right here, at the moving average and above the moving average, that's a resistance. So if we break out, and we're going to open up around right here, with potential of making third push up, first push, pull back, second push, pull back. We might get there with the third push. Bears still might see a wedge bear flag, and we could come down, okay, from there. So we'll see how we're going to handle this upper one third of this trading range. If you divide it into three sections, 1, 2, and 3, we're rejected there. We're going to open up right, where are we now? 39.59. So we're going to open up right here. We're bouncing. Now, can we get actually a double top? Do we have a wedge here? Maybe 1, 2, 3. We might get a double top lower high. And if we come down, this is where I want to see bears test it, bounce, get back below, and then come down and test here, so on and so. So I need to see this double top, okay, around here to sell. Otherwise, we might keep pushing at the open. Now, there's a little bit of delay here. Give me a second. Okay. On the Globex, right, so last we had Head and Shoulders. This was Friday. We made a lower high, failed to take out that high, so and then it sold. But then bulls might have seen a double bottom, okay, bull flag, and they tried to reverse the market, but we ran out of time. Then we opened up yesterday after hours, went up a little bit. I posted in the Discord late night around, I think it was like 8:15, 8:17 p.m. Eastern time. It's saying that this right here is a major resistance. I ended up selling and holding overnight, and I woke up around 2:30. It was a complete accident. I just woke up and I was like, oh, this is nice, so let me move my stop. I moved the stop, but I gave the bulls 10 points. They just went up and they kicked me out of my position, and then I went back to bed again. But that was really good run to the downside. So we're getting back to that resistance. Again, that puts us in a trading range. Trading range highs are up here. This area is resistance, okay, is the new resistance. We might go there and test it. Right now we are hovering right here. So I already traded this leg up, leg 1, pull back, leg 2, pull back, leg 3. So there's leg 3, or you could say it's a complex leg 1, pull back, leg 2, okay. At the open, if we do get above 39.64, we're going to keep pushing higher, okay. So we're closer to the Globex high than the mid and the Globex low. So it's, let's see, how big is this range? Okay, so it's quite large. And this kind of makes me nervous because when a range is, Globex range is this large, bears kind of want to start looking for a place to swing trade as well. as long as we stay below this level, okay, and we fail and we make a double top, okay, so we come down, we go up, we might get a really nice, okay, opportunity to swing trade. Early buyers are probably here, so we might bounce there, but if we break this again, this is where we're going to come down because this is still support from here, okay? So I'm open for bears to wanting to swing trade this because we do have a resistance. We're breaking that resistance. This is the third touch and break. So the bear is probably there to fade it. But I want to see how market is going to react to this area. If we use this area as support, we could still go back up. If we break the Globex high, I don't know how far we're going to go because this area is very strong resistance. So we might actually start to maybe 1, 2, 3 wedge, okay? And then start to come down from there, go back and test, and then start to swing from above Globex side. But if this is a key level, mid-Asia and US midnight open. As long as we stay below this level, okay, and bulls are not able to break above it, this can become a really nice swing short. But it's difficult because we do have a gap there, so that is going to act as support. There is more gap right there, so this area, even if we come down, possibly we could go right back up again. So it's a bit of a difficult here, but we're closer to the Globex high, so that becomes magnet, but right above it is resistance. On Friday, we started, okay, with a gap, slight gap down, but within the prior days, Thursdays, okay, range. Now, when the market is bullish, it wants to go into some kind of a trading range. Market already went into its trading range on Thursday. So we have 2 tests, and now we test again. So we need 2 tests at the top, and we need 2 tests at the bottom, okay? So if you divide this trading range into 3 sections, look where the sellers showed up, at the upper 1/3, okay? To me, this is a double top, and is double top right at the EMA, and a beautiful swing. And what you're also seeing here is a bear flag, okay? But it's an expanding triangle bear flag, right? So when an expanding triangle bear flag gets the break from the downside, bar 10, okay, you're getting a measured move there. From there to there, all right, your early measured move. Measured from there, look at bar 14. Tests beyond that is, you can even actually take that gap into consideration too, if you want to extend it a little bit. Or you could say, hey, I'm going to take this, then that's fine. Or if you want to continue because there are more gaps, then this is your actual measured move, 33.75, and the bar 27 actually tests before reversing right back up. You also have a pattern trader's dream here, which is a double top neckline, which is a much bigger, okay, is measured move. So that's your measured move. Or you could say, well, I think I'm going to take this as my measurement, and there's a gap. So you see where I'm going with this. It's a similar thing. Maybe I could take that. That still gets you to 33.50 with the bar 27, okay? Double top neckline is, you have a trading range at the lows, okay? Bulls are trying here. Bulls tried once, bulls tried twice, but they failed to take out that high. We trapped the bulls there, but the unsuspecting bulls, they put their stops there. That is not good enough breakout. That's a breakout and a failed follow through. But the new traders, they're going to load their stops there. Some will have it there, some will have it there, some will have it here. So the market makers see this area as a great place to dip, okay, is run those stops, which they did with bar 5. It went one tick below bar 61. And then what they do is they make the market look very bullish. So there's more bulls jumping, and that's the second failed leg. Try once, try twice. This becomes now I'm looking for a double top when everybody is looking to buy. I'm looking for a double top trap, and I see that, and now I have a new stop. We're going to run those stops. That's my early 1-to-1 measured move target. I can sell with bar 10, and we're getting gap bars underneath the EMA. That means you're going to get pauses and continuation legs. Here's another one. This is also a bear flag, another expanding triangle, okay? But this one, 1, 2, 3 push, but like this one right here, did not break below like bar 10. We did not break below with the body. So now we're reversing because we also have a micro wedge there, right? So the 19 to 20, 24 and 27. First, we're going to get to that apex of that triangle. If you extend, now I'm looking for 1, 2, and 3 tests. Bar 37 actually tests that. We ended up in a trading range, but because we have a gap here, right? So market is looking for ways to trap the bulls and wanting to create a bear flag, a much bigger bear flag. Every time I see a big structural double top and the neckline is taken out, I look for a smaller bear flag. Then I look for a bigger bear flag, and I look for another bear flag before market actually starts to reverse. So this is that bigger bear flag. We can actually sell. Look how big it is. The problem here is that this trading range, that's bar 16, right? This is more than 50 bars, okay? So we're either going to break down and fail and get back above, okay? Or we're going to break above, fail, and get back down and break down big time. So we are at 39, 53, 54 area. So looks like we already challenged and broke this trend line from above, but I don't know how strong the bulls are. So they're going to have to show us. Look what's happening here. This is a key level. If bulls fail to get above 39.64, which is right here, if we fail to close a bull bar above bar 37 high, okay, we're not going to be able to get up to this level, which is bar 5 low, is what the market wants to test. But if we get rejected and we start to sell, we could break this, okay, from the downside. Where can we go? Well, let's look left. There's a gap here, okay, which is open, might act as support. Okay, so we got a resistance up there, we got a support here. This could end up becoming a bear flag. Now, what is the problem with this bear flag? Here is bears try to sell once, failed. Bears try to sell twice, they failed. But the bulls are not doing anything good here either. I don't see strong bull bars other than 65. Now we came down and tested. If we start to get big bull bars closing above this trend line, then yes, we might actually finally break and test this area. I'm more interested in the high of bar 7. Market could bring us up there, okay? So, but they have to, bulls really need to show us. So I don't really see anything. All right, here we go. All right, look where we are opening. Bulls are already opened that bar. This is no coincidence, okay? So they're already showing us a bullishness, but we don't know. This is the first bar. I like to take a look at the second bar close. we are inside a key level, price level, in between the two key prices. If the bulls break above a 64.39, 64 with a bull body, I've got a target up there. But if they fail, then we might snap back into the triangle. But I don't think we will. I think this is going to close strongly bullish. This is where we're trying to. Friday, we ran out of time. My targets were up here. Anybody who followed Friday late afternoon, I was actually sitting there at the close, and unfortunately, I've traded this going long, but I had to exit out with bar 77, I think. Oh no, actually I waited. I exit out somewhere here after hours, so because it didn't really go anywhere and there was no time, and I'm not going to hold anything over the weekend, so I exit out. So I need to see bulls close a bull bar. If they fail, what could go wrong? Well, this is resistance here, okay? But there are a ton of stops above these wicks, okay? So market needs to run those stops, maybe tag here. In order to do that, we need a strong bull body close and another one open and go. I don't see it yet. Market just started. There's a bit of a confusion and panic in the markets because of what's going on with the banks. Okay, here we go. By the way, whatever is happening with the banks, if you are new and wondering what could happen to your investments, like your 401k or IRA, and things like that, nothing will happen to them. Because if your investment bank, okay, is not investment, but think of your broker as investment bank, right? This is where you invest. If their stock plummets, like I think Charles Schwab stock came down pretty hard, you don't need to worry about it because our accounts are insured. It's not the same insurance as the banks use. But what happens is that if something goes wrong with the broker, we are insured, our accounts move to another broker. Okay, so nothing gets liquidated. The worst scenario, they would write you a check. Okay, so you would get all of your money. I've never experienced this before, so hopefully we will never experience it. But you don't need to panic about that. Okay. All right, so here we go. Bulls are trying to close a bull bar here. They're trying to get to March second low. That should be low. And then February low becomes magnet also. But I'm more interested in the 39.70.50. But again, this is, remember, what the market makers do best is that they make something look very, very bullish. Well, this is very bullish, okay? And then they run stops and then they reverse it back. Everybody starts to sell, okay? Everybody who were long, okay, their stops are here, maybe underneath 76, okay? They make it look like selling. Everybody starts to sell because they see a trading range. And they run the stops there, they run the stops there, and then they just reverse it right back up again. So we tested that high. Look, we're running stops. You see that right there? I get rid of this. You kind of got the idea. We just went above. I said bar 37 high is magnets. We need to test that. We were supposed to test that on Friday afternoon. We ran out of time. I mean, there are a couple of people here. They were actually waiting. We were forced to exit out. We could only get this much. So now we're running stops. We're coming down. That is not a good breakout. So what happened here? I talked about, could we get a double top right there on the Globex chart around 39.64? Could this end up become a bear swing? Oh yeah, but they need to close a bear bar underneath 53.25, which is midnight open for US. Yeah, I'm talking about the 401ks and your retirement. Not really talking about Ninja, perhaps, or any other. But that's good that you asked. So let's see what happens here. Bears really need to close below the 53.25 and below that trend line. If the trend line holds, again, they're trying to panic, okay, the buyers, because anybody who bought, their stops are here, most likely. I wouldn't put a stop there because we did not take out that high with a bull body. Your stop should be down here, maybe even a wider stop since you have a trading range if you're long. So bar 1 is not a bull bar. We have a trading range here. If you divide this trading range into two, we're smack in the middle of it right now. Bears trying to swing this with a double top, possible wedge top. So they want to come down to the neckline, which is right there. 8 a.m. Eastern time. That bull bar is low. But it is also support here. Be careful because, why? This is a micro double bottom. There's a tight trading range. It's probably support. If it fails, we could test is bears trying to get to 44.75 to 43.75 area. But if it acts as support, it's looking for a support, probably. It found resistance, so now it's looking for a support. We'll see a double bottom, possibly bull flag, and they want to take that top trading range high out with a bull body. We're in a trading range, so it's limit order market, but we're right at the 50%. We just came right inside at the apex and we tested that with bar 2. I'd like to see is market come down to 39.50 area. But I don't know, this double top, is it going to hold? They have to close this 15-minute bar in 6 minutes bearish to sell. That could bring us down to 39.50. Possibly even 23.50, 39.50 or 39.23.50. For bears, that's where they want to bring the market down. For bulls, they want to close a bull bar, take out that upper wick with a bull body, and go and test the 39.70 and further above magnets. But they have to close a bull bar above 39.64 at least. So it's confusion. Went up and closed the bar bearish. Many bulls who bought there, they might have bought down here. They're trying to break even. Just waiting for the 15-minute bar to close. The decision hasn't been made, but it has been bullish. But there is a possible double top. Bulls need to demolish that double top and close a bull bar above 39.64. Let me check something before. Bulls trying to swing this, but they need a bull bar closing on its high. Now, mini bulls are stuck there, right? So they both down here, they're kind of getting back to where they might have entered, or at least a break-even decision has been made. 2 more minutes. Now, the last week, 66% is holding, okay? But if we close below it, we could come down to the midpoint of last week very quickly. I didn't buy it. I'm just waiting for this bar to close. All right, just about 10 seconds left for this bar to close. There's a fight going on there in that key level. And that's, okay, more confusion, is more sideways, but up. And on that's a bull bar on the 15-minute chart, so that's not good for the bears, but bulls might try to take this as an opportunity as trap and go higher to the 39.64. But bulls really need a strong bull body here. If they fail, we could end up coming down to 39.40 very quickly. So that is not a good bull bar. You got an inside outside. Inside is going on the 15-minute chart. And if this body on the 15-minute bar, on the 15-minute chart, this 15-minute bar closes on its low, that could bring market down to 39.40. So depending on where that body closes, as it goes down, I think more bears will join, and we could bounce at 39.40. Higher it closes, the body, then we will definitely break the 39.64. So you can see the confusion. Some bulls exit out, break even, 2 and 3 high. Anyone who sold here might be selling up here, trying to break even. So we're gonna get order flow tipped surely. Bulls definitely closing much better bodies, but it would be better if the bar 4 closes on its high. That would be a lot better opportunity for bulls to go, but it's just not decided. The only good body close for bulls is 2. They need another one. If they fail and this body closes on its low, takes out this trend line, we could quickly come down to 39.40. So bears need, okay, so then there you go. Order flow is just tipping here. So I like to see is continuation. ATR is almost 11.1075. So we're probably going to test 43.75, 39.4375, or 44 on E-mini if they can close this bar is as bearish as possible. Could this be a double bottom higher low with a trap? Then you want to see bar 4 close on its high to trap the bears trying to sell. It's still very difficult to do anything here. Bulls need another bull body. Then you would have a neckline up here, buyers probably there. If they see bar 4 closing on its side, they're going to start to buy above this neckline very quickly. So the bears tried for the second time, and they were tipping the order flow, but that ended up trapped. See, I needed to wait for the bar to close. Without seeing bar 4 closing bearish, I cannot sell it. Okay, so now bulls got their second, okay, strong bull close, and they're trying to buy. And the goal is to get to the 39.64. We have a small trading range here. If you just count from the first bar, there are always sellers here, buyers down here. So higher low, double bottom. Bulls are trying to break above this level. There will be some sellers always there, wanting to scalp because they see bar 4 as a leg in a small trading range. But also the bigger trading range here, but there's a room to the upside. This is where the bulls are trying to go. See if we can actually close that bar. But there's a trading range, but we did sell there. I don't think we will now. We're actually squeezing out these bears. So the 70.50 is target. See if we can get there. We just need to close a bull body. We're trying to close a bull body above 64. We're probably going to push further high, is above the 70.50. Bar 7 low is the actual target I'm looking for bulls to reach. See if they can push this further up. But first we need to close a body above 70.50. All right, so I said bulls needed a second bull body strong, and they got it, but they really need to now squeeze these bears out, at least get the 70.50. They might continue to push towards 76, 75, 77 area. They don't need to stop here, 76.50. I like to see market overlapping somewhere here with the bar 7 body. I want to see not only 70.50 tested, I want to see 72.50 tested, but they need to close a body up here and not collapse. That will give us a measured move target to the upside. Okay, so if we can get that bull body, that will be your early measured move, possible continuation, and actual measured move to 4,000. It's a trading range high, so a seller selling there. But we really need that bull body closing above 39.64. Then the measured, the Globex high becomes also magnet. But I'm more interested in what's above the Globex high. So we just need bull bodies, and that's not good. It should be a lot strong. Bullish close. It should be a lot strong. Bullish close. So I will scalp there, and I will leave a runner. I want to see the overlap with bar 7 body. You would start from underneath bar 4. Why? Because look, bears did sell and took profit there, right? So that's a 20 point. So now they could not close beyond that. Their swing is down. They failed to swing. So now the bulls are swinging, right? So that's why I said, if the bulls get that second bull close a lot stronger, you got 2 bull bars, much stronger closing than the bar 1 and 3 bear bars. So now you start from the bar 4 low. They already got the 6 points. They're swinging, right? So they got a 20 point. They need to close above right there, that pink line. If they close a bull bar above that, we're going to go up another 10 points, most likely, if not 20. Now, I'm not counting the counter because, see, bears already made a 10 point there. You could say, well, what if I count from here then? Sure, then that will be your 10 point. Okay, so bulls took profit there, 20. Now the bears sold, but there's no bear bars. I can't really sell. Market is so strong, the average move is nearly 10 points. Okay, so I need to see bear bars to see continuation. I don't see it. So you can either count from here or you count from there. Since bears moved the market 10 point and taking profit, now the bulls are moving. That's the first target here for bulls now. So bulls are trying to reach there, but it's so easy to get there because average range bars moving is about 10 points. So I'm bullish, but I'm always taking profit at the certain highs, scalping. If I see strong bull closes, then I'll know anybody who has stops down here, they're going to move the stops underneath 4. Okay, so they might have stops already moved underneath 76. But swing bulls need a bull close and taking out this trading range high, okay, to get to the bar 5 low. So they're waiting for a bull body. So that's it. All right, you see how they just test that? That's no coincidence. Immediately you get the upper wick coming down. Immediately machines take profit at the 10 point. But if they do close the bar above that, somewhere there, that happens to be the top of the zone. But if we close above it, we now get to further up, possibly to 15 point. 15 point should be very easy to get to. Okay, so I want to see bulls do better here. I said 72.50 we might test earlier. I want to see that 15 point swing tested. Okay, I left a runner. 70.50 we just tested. We just need to close a bull body. I mean, this should be in the bag. This is nothing. 15 point. We should get to 20 point, in fact. Right, so I'm going to mark the 19 to 20. You know, I'll just do 19 since I have a target there. All right. Let's see if anyone's going to go for it. So I have a runner. I scalped your 39, 70, 50. I'm going to hold a runner. See if we can actually break this area with a bull bar. And the Globex high is my target, but really I'm more interested in what's above the Globex high. Okay, is that resistance area. So we should shoot up there. I'm going to hold my runner. All right. But, you know, just don't be jumping around like I'm doing. I'm just showing you guys. 15 point, you have to pay yourself, because we could make a huge upper wick, come back down, because look how much we gapped up from the EMA. So that area becomes a big ticket item for bulls. So I just like to see is continuation for bulls. That's beautiful. Plus the measured move target, right? So if you're conservative like me, right? So I would take that. That would be your measured move target, give or take. I mean, I'm not doing the best job there, but there you have it. But we need to close above 15. Look how close we got to 15, okay? So that, to me, anytime from 13 point to 15 point, that's 1450, that's overshoot. That's, you're smack in the middle of the profit-taking zone. So that, to me, 15 point is scalp right there. You don't have to be right at the 15, but ATR is so healthy, we're probably going to finish the job and tag that 15 to the tick, okay, which is right there. So if you're still holding, let's see if the bulls can finish that. And GlobeXI is right there. We should reach that as well. So I'm still holding the runner. It's just not running as fast as I hoped that it would, but there's still room to the upside. I'd like to see continuation to 77.50, like 1 point above 76.50 is at the minimum tested. Maybe 77, I should say, maybe 2 ticks above. So that's a target. So we just need to close a bull bar above 70.50, is have another 6 point go. That would give us another 10 point. But I'm ready to take profit if I start to see bulls failing. I just don't see it yet. So I'm going to hold on to it. This bar closes like this with a bull body, is we're taking out a major structure. Therefore, those stops are going to move underneath bar 4. But that's a breakout. Bar 7 needs to follow through. Breakout bars always pull back, okay, because we're still in the 15 point. Pullback could be shallow. So as long as we stay above bar 6 and especially bar 5 high, we could get another leg up. But if the bar 8 closes bullish, oh yeah, expect continuation and another leg up, in fact. So the 39, I'm going to hold my runner all the way to 39, 81, 50, 82 area. That's where I want to take profit, because that's where we're going to get a major pullback. All right, so I said if you hold your long is at the 15. Look, we just went 1 tick above 15 point and they're taking profit. That's no coincidence. That's science. That's rose science. Yeah, that's the machines taking. They see 15 point is a great place to pay themselves. If it closes bullish, okay, above 15.75, I might add and run into the 20 point area, but I need to see first this profit taken is be done. I'm not very happy with this pullback, but it is a pullback bar, so it has to live up to its identity, right? You gotta break out bar 7, and bar 8 is a pullback bar. Just because it has a bare body I don't need to panic and think, oh no, this is going to become a major 2-bar reversal. In order for bears to take over, that bar needs to close right around where the bar 7 opened. If they fail, okay, and you sell right here by just looking at the bar without its close, all right? First of all, you need to sell up here with a limit order. You would have scalped out, and then you would have expect maybe with a runner that bar to close somewhere near the open of 7. But if that fails, then you can leave the market with your runner. You can exit out because we could just go up very quickly. Okay, so that area, I said we're probably going to test around 6 high or 5 high. We are testing. Bears need to close a really nice reversal bar. It doesn't cut it if that bar closes somewhere in the 50% of bar 7. That won't be enough. It needs to be a very strong bear bar. Then I'd say, okay, that's a 2-bar reversal, and we're probably going to come down to the EMA. Okay. Now, the one thing that bothers me, we did come down now and test that low of bar 7, but I still need to see how that bar is going to close. It is an outside down bar at the moment. It's very strong, and my runner is losing. And I also see something else here, that 15-minute outside up bar, although it is strong, it did not close 1 tick above 64. That's a problem for bulls. Okay, so now you have a strong pullback and an outside down bar. I'm just going to wait. I can always buy here and fix my runner, which I think that's what I'm going to do. So bulls should not have allowed that, but you're trying to sell against 1, 2, 3, 4 bull bars, except this was the second leg up, right? So if you count from here, it started as a profit taking, which I said they were probably going to do that at the 15 point. And bears, so a 2-legged move. Now, could this be a fake breakout for bears? Yeah, that could happen. Next bar needs to start buying here. Free these bulls out of their bad positions, okay, stuck positions. So it's probably going to want to go up there. But if that bar closes, the bar after 8, bar 9 closes bullish, then the bears are going to be stuck. Okay, so right now they're selling because they see outside down bar, and then they see failure to close above 39.64. But many bulls will buy here because they want to fix, okay, their stock positions is up here. So it has a potential of going up a little bit. But it is an outside down bar, so other bears are trying to sell. I didn't sell. Don't want to sell against this leg, these 4 strong bull closes buy to close. So bull's probably going to try to fade it in hopes of trying to get the break-even position at least. Okay, so I am one of those bulls who bought down here, looking for a slight, it just needs to go slight, like towards here. So some bears are selling, scalping. If we take out the bar 8 low, then that's going to be a problem for bulls. Then you have to wait until market to come down to EMA, and then more bulls to actually buy at the average price right there. Because bears trying to get probably some kind of a scalp here. So they move the market 15 point. You see why I bought there? Because it's a 15 point. So if I buy into the profit taking by bears, I have a potential of fixing my stock runner, which it just did. So I'm out. Yeah. So now, could I have hold it? You know what? At this point, I made my peace with it. If it gets above, if it closes a bull bar, sure, I'll buy again. But right now, I made my peace with and made my decision. This is what I learned as a trader, is when you commit to do something, do it. And don't just, oh, what if I do this? What if it doesn't matter? What if doesn't matter? I'm stuck up here with a runner, okay? I already scalped, I made great money. I don't want that runner to take away everything. And bar 8 happens. That's a problem for bears. But the biggest problem is right here. Why didn't the bulls close that outside up bar body one tick above 64? Okay, that's a problem. I see that. I'm going to commit to fixing my run. I don't want my runner to lose money. It was already losing about $12 or $15, or I'm trading with the micros. So but that's fine. Runner's job is a run, but sometimes it doesn't run. So what am I going to do? I'm going to fade. Immediately I see how much the bears move the market. That's a 15 point. Oh yeah, they're going to take profit. What I'm going to do is I'm going to buy with another contract, not 2, 1. So I have a 1-to-1, position going on there. And I just waited for it to go up, and I made my money. I'm out. So I'm flat right now. I'm just trying to make a decision. Do I want to go up here? Could this get its measured move target? Yes, it can still get its measured move target as bulls, but I need, this bar 8 to get stuck in between 2 bull bars, I call that a stick sandwich. All right. If the bulls show me that they can close that bar somewhere here, more bulls will buy that close and we're probably going to go high. So I'm waiting for that. If they fail, then this becomes a break even. And then bears can plunge this all the way down to 39.40, 39.41 area. Well, not with the micros. Micros, I don't have to be that strict. I always look at runner is that it's not going to run. It's going to be a nice surprise that it's going to run. Hey, that's great. But I generally look at runners as a loser. So if I'm trading E-mini, yeah, I would definitely move my stop to break even. But prepare that you're always gonna be kicked out of your position. But there's always that joy. Hey, listen, I made money. I'm losing nothing. Especially if you're 1 tick above that break even, you're actually making a 1 tick gain. So you're losing absolutely nothing. You can always start over again with the right contacts. All right, so that bar closed above 64. We've got an upper wick. Now, problem with the bar 9, it's not the test that it's not the setup that I was looking for. However, you see how they faded bar 8, which is a bear bar. So many bulls who were stuck up here, they bought maybe, you see that breakout point, bar 4, buy the close, bar 5, come back and retest the second leg bull. So if you actually put a buy order right there, look where we are still hovering. Decision is being made. If the bulls close a strong bull bar above 66.25 or 66.50, look, they're still breaking even. The decision has not been made by bulls. So they're trying to close a bull bar to get back up to where originally they might have been stuck. But if they fail, we could quickly come down to the EMA first, and then possibly even plunge and test of 39.41. Or 40. So I'm going to wait for this bar. These bulls stuck up here, they're still at their break even. They're just trying to close the bull bar so that they can go higher. But if they fail, then it's going to be a great decision on my part exiting out. This is why I'm flat. I'm flat here because the decision is being made. Because these bears, look how big it is, right? This bar, it wants a second leg down. So that's right there is why I exited out. Because each side always try twice, right? So that's what the second leg is. Third leg is generally momentum play. So the second leg, you have to get it. They have to try. Bears need to try twice. They can fail with the second leg, then the bulls can take over. But I don't want to be stuck in that second leg. So I commit to something. I'm gonna be true to myself. There's no shame in trading as long as you are green. But if you're doing the right thing and then you're doing the wrong thing right after that, I'll shame you, right? If you commit to breaking even, but instead you stayed in it because you didn't even wait for a confirmation for bulls to show up, then you're doing the wrong thing over and over. You're not committing. Right, Raph? Now, why would I do that? Well, because that makes me more experienced than you are. That's because I have done it many times, so I know what I'm talking about. That I have shamed myself many times when I was learning how to trade these bars, right? It's called stubbornness or not knowing what you're doing. So that's the second leg for bears. At least they're trying. They just need to close that body bearish enough. There is a spike, pullback, and wedge channel, right? So this right here is where bears want to come down and test. Remember I said 40 to 41 we might test? That's where it's coming from. So that's the low. I don't think we're going to go there. But that's the 40, I'm going to say just around 41, 40.75. So we might actually go there and test that area if they close this bar bearish enough. Because what the machines see here is not a very proportioned wedge, but it is a wedge. Up, up, and up. Or 1, 2, and 3, but I wouldn't count from there. I would count from here because we got a really nice deep pullback with the 2 legs down. So that becomes the spike pullback channel. See, that's the second leg right there. And we just came down to the EMA. Well, there are times I'm wrong too, but I learned that if I'm wrong, everything checks my checklist, and then something happens there, and I'm wrong. I'm not going to sit there and wait. I'm just going to exit, right? So that I can take advantage of the other side if they are strong. Like if I weren't talking, I would have sold probably and scalped and left the runner. And I would have scalped at the EMA because of that second leg. Now, bears need to close a bear bar if they want to continue down. If they fail, you see, you could have been also a buyer, I said, at the EMA. That's probably going to bounce there because it's basically average price. Think about, since bar 1, we went sideways. A bunch of people sold here, disappointed with bar 4. What are they going to do, right? So let me get this out of the way. If you're a bear and you're stuck, do the same exercise. You sold, right, underneath bar 3, not a good bar to begin with, but say you sold with a limit order right there. Maybe at the highs you sold, but you're stuck. So where's the opportunity to sell again? Bar 8, right? So since these are sideways limit orders, you don't need to put a stop order underneath 8. Instead, sell at the close because of too much overlapping. That gives you a break even. Look, bar 10 and bar 11, break even bears who were stuck down here, possibly. All right. Bulls might be looking for a micro double bottom at the EMA for a bull flag. Bears might be seeing a small head and shoulders pattern here, but it's kind of difficult to sell, especially if we finally get that strong bull bar above 39.64. We need a bull body. The market is buying the pullbacks. So far, this is what I'm noticing. Okay, we do have, look what's going on here. This area is being used as support. We need the bull body to close above 39.64. And then is better if they can actually close that body up here. Then we would is test the Globex high and then test right there. So if this was a squeeze, okay, squeeze generally does this breakout. All right, it goes like this, it goes and then comes down. That's when it buys. But you want to see bull bars closing above that prior high, not making a double top. All right. Bulls want to test the prior high is bar 8 high. They're probably sellers above that high because they sold there, got a 2-leg down. So we're probably going to test above bar 8 and go higher, but they're probably scaling bears waiting there to sell. When you have 2-legged move, even though legs are only 1 bear bar, at the highs, sellers waiting there, but it's not that strong. This bar is very strong. You're going to outside up bar. Okay, so you have an inside bar, 10, outside bar, 11, and then an inside bar, 12. Bulls need to close this bar on its side, even if it's a tiny little bull bar, as long as it closes somewhere up here, more bulls could join. But I think this is a squeeze, and we're trying to squeeze out the bears. The only problem here is that there's a small trading range, and this is a leg in a trading range. So machines see this as, hey, sell this strong bull bar. Scalp a couple of points, scare everybody out of their wits, and then if they fail to close this bar bearish enough, even if that bar closes bearish, but the body closes up here as a bear bar, bulls probably going to buy that right away. Okay, bears really need to close this body low enough to get continuation, because machines will sell that automatically because they see that as a leg in a trading range. But to me, this looks like a squeeze, and we're going to get up here. It just, machines do what they're programmed to do, and it's bar 11 is an ideal bar to sell. So swing bulls are trying to start a swing, but they really need to take out the bar 8 high. So these bears need to be discouraged here. This red area is the area I want to see bulls actually test before coming down, unless there's some kind of a news come out. So I'm going to expect bulls to take out the bar 8 high. I'm long again with a small entry. Bears want a double top. They want a wedge 1, 2, and 3. So it would be better if we can actually test the 76.50. Now, generally from as early as 2 points, since ATR is almost 10, well, almost 10.50. So I'm going to say from 5 points to 10 points area, price could move before coming down, before bears even show up. But generally, it starts around 2 points as early as sellers could be positioned. But since ATR is 10.25, I'm going to go for average 5 points from above bar 8. So I want to see at least a test of 76.50, maybe bounce there with an upper wick, and then get above it and go up a little bit more, possibly to 82 area, 39.82, above it and go up a little bit more, possibly to 82 area, 39.82. So I want to scalp, see if I can get a 76.25 on the micro. Come on, bulls. 76.50. Come on. 76.25 for a micro. See if I can scalp that. Possibly going to go higher, but I'm worried about this area. So here it comes. I said here it comes, and it's just, you see how it stalls at the high? Because it's about to break out. Bulls are like, we're taking this. This is a great, now we're going to take that stop. If they can close a bull bar above bar 8, they're going to take those swing stops and position underneath bar 11. But they need that bull body. So they will try to push this. So therefore, they should at least test is one tick above 8. But what if we get a double top here? That is a perfect double top. But this is too late in the game for bears, I think. We should just get to the 76.50. I mean, look how big this bar is. It should get continuation. Globex high is right there. So I like to see bulls to continue to 20 EMA on the daily chart. So I'm still waiting. But there's the wedge and a double top. Call this a micro double top. Okay, so spike, pull back, wedge, micro double top. Bears trying to get that perfect double top on the 15-minute. Squeeze is never easy. But once it starts, it can actually go all the way up. So let's just wait a little bit more. 4,000 is magnet. I don't have it, but it is magnet. I'm going to put it back on the, just waiting patiently to market to pay me as usual. Come on, pay me. See everything green. 76.50. I'm at the 25 on micro. It's just a scalp. All right, another bull bar is good momentum, but no breakthrough. So bulls really need to do better here. I'm going to sit there and wait patiently because this is a potential of running to 79.50 before even coming down. So it's probably going to breach that 76.50, but I'm going to get paid right there because that's what I'm committed. What if it doesn't? What if that's all we get here and we get a second entry sell? Bears need to close a bear body, taking out the bar 13 low to make me believe that they can start a second entry short. I'll sell that. I'll quickly exit and I'll sell it, but I don't see it. So I'm going to stick to my guns and I'm going to get paid. All right, so I'm still waiting. I don't like what it just did. It actually tested that prior high. Now, there's some sellers always at the highs, okay? Because anyone sold here, they want to sell again. Bears need to make me believe that they can get that second entry short with a really strong bear body taking out the bar 13, maybe even 12 low. Then fine, I'll exit. It came so close to my target, but that it's not enough. So I can't really say that this is success. That's 2 points away. Okay, so where did they start selling? That's not enough. 2 points is right around there. So this price should go up at least there. That's like the minimum. So I'm just going to stick around and wait. They're trying to scare the bulls. They're trying to shake off the bulls out of their positions. All right, so now they're showing some teeth here. Possible wedge is double top. There's still 6 minutes, 6.5 minutes for the 15-minute bar to close strongly bearish. But these bears might have sold up here right above. Would have been better if we could actually get up there. Now, if this bar now closes really bearish, I might be inclined to exiting out, because if this is a double top, this is a neckline, and this squeeze failed, and we end up coming all the way down here, there are probably buyers waiting there as they were long. So they're going to buy here, they're going to break even and exit out. But the bar hasn't closed yet, so I can't really, be scared. So I'm still waiting. It's probably attempt to give these bears a break even, selling at the highs. It is a nice outside down bar. Bears do see a double top here, and it is the second entry short, but you're selling into the support. Okay, just around here. So I am now going to sell it. Now, if anybody who's scared and stuck up here, they buy the close of 14 and they try to break even. So I can do two things. I can either buy or exit, or I could just wait for it to get back up here or a little bit above, and I can exit right there. But anybody who bought underneath 13 is basically exiting out. That's exactly what I did. Okay, right there is I bought underneath 13, and then it came here and look, gave me a couple of ticks to exit out. So it's because bar 14 is very strong bear close, and it creates a second entry short. The problem with the second entry short, it made a new high. So I don't know how good of a second entry, because bulls are looking for a second entry long here. And I don't know if I want to sell, so I didn't exit. I did not exit this. I could, but I watched it giving me that, okay, it just went up like a couple of ticks above. I could take out. I wasn't really committed to break even, because this is just, I think, I'm going to give bulls another chance to get to my target. I'm going to try not to be intimidated here, because bears tried once, bears tried twice. If bar 15 closes on its high, many bears sold are going to be stuck. But if it closes on its low, then yes, I will wrap my order and, in a nice loser package. It's going to probably cost me like a couple of dollars for sticking here to my long, but that's okay. I'm willing to lose that. But if this attempt to sell fails, we're going to zip right through the 76.50. In fact, bulls are trying to get to 76.50 and then further up to 82 area, if not 82.50. So it didn't feel like I needed to panic to exit out. Market gave me every opportunity. It brought me right to my entry price, even more. Now, I'm not committed to break even unless this bar closes bearish. Well, look at it, right? So Since we did not make a new high with a body, think of this as first entry failed. Here's a second entry for bears, right? So if bears sold and stock what are they going to do? They're going to try to sell at the highs. Okay, I hope them to move the market 2 points at least and sell from there. But they were in a hurry to sell. That's because they're stuck, right? So they might have sold, let's say they sold underneath here. They sold above, there, or sold somewhere at the high. They're getting their break even with 14. So that's kind of expected for them to come down. Now, other bears might sell, but the market is bullish. 20 EMA is above 1 hour EMA. Bulls are above, right? So we're getting really nice bull bars. I don't know. I just didn't feel like selling. Instead, I bought underneath 13. It gave me a scalp, but I didn't take it. Then it created this bar 14. Okay, I could have exited out. It came to my break even many, many times. So now I'm losing about $3. I'm just going to stay here because I think this is squeeze, and we're trying to squeeze out the bears from the market. So now you have an outside, inside, outside, 13, 14, 15. 15 did not close all that bullish, okay, for bulls to buy and go. But this is also 10-point take profit. If I don't see bears closing a bear bar, we could end up getting a 10-point profit taking bears, and then the bulls taking over and go all the way up and test the bar 14 high instead. Okay. I did not sell. I didn't like the way this looked like. Yes, it's a second entry technically. I don't like it for 2 reasons. Market made a new high, even though it's not a body. And then I saw these bears are selling because they need to break even. The market is bullish short term, and we're above this level, so I just didn't want to. But market is giving me second time to break even. Now, if they do close that bar bearish below this level, that's 10 right there, okay? We could quickly move underneath the EMA, okay? But if they fail, and if we close this bar bullish, then we're going to go up here. So market is still telling me something. Look, listen, you can either exit out. I'm giving you another chance with 16. I'm committed to be bullish here because I think this bar is going to close bullish, and we're going to take out, and we're going to overshoot with a third push because this is a phenomenal bar for bulls from the EMA. Needs a second leg up. But eventually, if this doesn't go my way, I have to exit at some point, right? I don't see bears being strong here. So I'm going to wait for market to at least test this bear bar's high where many bulls are stuck, right? You got a mother bar outside, inside, 14, 15. So if the bulls actually close 1 tick above, the midpoint of 14, they're going to go test the 14 high. All right, so I'm still waiting. 76.50 probably will be tested. Possibly even 77.50. I'm going to try to get a lot more out of this. I move my exit order to 77 on the micro. 39.77. I'm going to scalp that, which is 2 tick above my target. Hopefully they will not punish me for moving my scalp order to 77, but I should get it. Okay, come on now. Oh, it literally tagged me and did not feel me, but it should go higher. Come on. See, target met right there, 77 is, but it did not feel me, but that's okay. I can hit close, but I'm not gonna, because this has a potential to tag 79 for micros or even 82. That's a 2-point. Remember, I counted from above bar 8. I said they should at least go there. That's a 2-point. So we know sellers waiting there, possibly waiting 5-point above. So it's probably going to go higher. So now I'm sitting at 78, 75 micros. So I don't want the 77 anymore. I want more. And it's probably going to go up to 81 or 81.25 most likely, but I'm not picky. I just want to scalp. It just came to my target. And here, let me punish you for moving your reward request. Is fine. I'll punish you now. Now I want price to hit 39.79. I'm at 78.75. Now I want more. I want additional 0.75 for playing with my emotions. And I'm going to get it. Because it's probably going to go higher. 39.82 is where they're trying to go. I did say price is trying to reach 79.50 earlier. That's resistance. So I don't know how quickly we would get to 82. I don't like these big pullbacks, but you see bulls are buying every pullback. So I'd like to see continuation and test out the Globex high. 82 is actual target. I just want to get paid. I don't always get what I want. In fact, market does punish me for greed. But in this case, I have high probability read for bulls that I think they're trying to get the 82 at the least. So I'm just going to be patient. But technically, it met my target. And I said I wanted to see overlap with the bar 7 low. We went 2 ticks above 76.50. So that's mission accomplished. You can easily go flat here, assume that this is going to collapse, but I doubt it. I think the bulls are going to try to take out bar 16 high, get to the February low is magnet, but you're more than welcome to go flat if this bar closes strongly bearish. So that's that 3 push top. So some machines do see this is a sell at the highs or above bar 8. Anybody who sold there, they sell and they hope for price to get back there. But I think bulls have another chance to push this higher. That's it. And then between 79 and 82, let's see if they can make it. They're trying to also reach the measured move target. That's the conservative one. But it's not really going strong for bulls. They're just you know, they see a wedge here. But we are squeezing these bears out. I like to see continuation. It's waiting at the 78, 75 with micros. Resistance at 79. Let's see if I can get that scalp. Micro ledge. Ledges are generally 3 bars minimum, not 2 bars. 14, 15, 16, you say? On the micro, you mean? I don't know. I guess, yeah, looks like, yep, 14, 15, 16. There's a ledge there. So market may come down and test. I don't know when. Right now, all I care is I want to get paid. So, all right then. All right then, I just got it. And we just tested 79, everybody. I was 1 tick underneath and I took that profit. But you are right, Andrew. Sorry, I was in a trade. I didn't pay attention too much. Let me read the rest of your, yes, MES. You got a ledge there. Good eye. Is it significant? Any ledge is significant. It's basically failed auction. So we have to push 1 tick at least below that on the micro. But I like it when it happens on the ES, not micro. We're squeezing out the bears. I don't know how quickly we will reverse there. We may not. We have a cup, double bottom, handle, so we're breaking out. Okay, I took profit here. I like to see continuation to 82, 39, 82. February low, which is magnet. Is it? Let me check. You might be right, but I don't know. 39, 77, 78. No, it's not. I think it's accurate. There is a 1 second delay there. It's RAF 79.50, 79.25. No, it seems to be same as the Thinkorswim. Maybe it was earlier. Just to give me a heart attack, you know, because I'm sitting there and waiting. The scalp. Yeah. That'll freak me out. It's right in the middle of it. Somebody says, oh, I think you're, oh no. I will hit close. But anyway, so I am flat now. Bulls are pushing towards the 82. As early as 81.50, they might start to take profit. But I think they're trying to get to the 82. They might overshoot towards 85. Beautiful. Test of another target. If you held it, that was the target. But this is what I'm interested. Okay, this red area. Bulls could buy the pullback to somewhere around bar 17 because they sold above 16 thinking this is a wedge, and now we have a wedge breakout. They're stuck, so they're going to try to sell and they're going to try to bring the market down and break even, or they want to see at least a test of that. But we do have a breakout, and we always had the measured move, and it's quite close. But this is where I would look to sell if I get a good sell signal bar. Because price reached 20 points. Also, these bulls reached 20 points, so they're taking profit. So can we safely say the bar 4 is a double bottom, second entry, long, pretty good looking, not the best, but signal bar. And that would continue higher because there was a failed double top, bar 1 and 5. Hold on. So what happened there, and the way that I was explaining, we have a double bottom, okay, and market found resistance. Remember, I said this is a trading range, and we're making higher lows. It's kind of showing me the squeeze, but squeeze is never that easy. We have to test the highs, and I said market is looking for resistance. Found the resistance. Try to sell it. Now, do you see any bear bars closing below bar 1? No. We are taking out the bar 1, and then I said this is not good. If we don't get a second bear bar, no body, candle body closing underneath bar 1 low, we're not bearish. In fact, bar 2 closed that way. Then I said that bar 2 needs another bar, bull bar. If we get that, then we're going to become bullish. Look, bears tried again, selling with the limit order, exiting out. If they have an exit out, they're going to exit out above it, above 4. So I said from there you get a micro double bottom, higher low is another higher low. Really nice buy. Bar 4 is a really nice buy signal bar. I said I bought 1 tick above it. So basically, the only thing that you have to worry about here, you don't see any candle bodies closing below bearish bar 1 low, and the bear's trying for the second time and not able to sell. Just exit out if you're still short and just reverse it. You'll make your money back and then some. And this is squeeze. Then I said, okay, we still don't have bull bars, but this is a squeeze. As soon as we get a bull bar, they're probably going to sell it. They did sell. I said it's gapping up from the EMA, so I'm going to take profit. I did take profit. I had a target there. They came down with 2 legs. I said I don't like this. I'm probably going to buy the close and break even and allow them to get a second leg. Then I said if you're going to want to buy, look for bears. Okay, take profit there. That was, I think, at 20 point. And look for a bull bar. You get a second buy signal bar, very strong. But the problem with the bar 11 is a leg in a trading range. Too big, too fast. Okay, so if you buy it, your stop's here, all right, or further down below, because we don't have a breakout. But we do have a breakout here, so I can put the stop here instead of there. So market comes down. I said this right here, if you notice, this is support. That's a second trap, second leg trap. Bears is bar 16 in a way, or second leg trap bar 14 and trap 16, you go. So you can put a buy stop order, another buy stop order above 16, okay, is way to get filled. Kind of fills you and then comes down a little bit, but that's just a breakout, pull back and go. That's when I bought and went long again. So I don't see any bear bars closing below bar 1, and then I see nice double bottom. I'm done. You got a trading range 50% here, and it's holding. Okay, so if I measure that trading range, look, see that? It's holding. You can buy above it and go. Buy again, that's your swing entry. All right, so now we're at the 82. I don't have a good sell signal bar yet. I need a bear body. You are welcome. I mean, 89 is there. It's magnet. It's measured move, but it's a bit of a difficult area here. I think the market wants to continue to go up to 39.91 area, maybe 4,000 is we might still go, but we just kind of gapped up here. And where was my did I measure that? Yeah, okay, so I measured that right. And it can still continue to go higher. It just, we're at these highs. I think market wants to test above high of yesterday. Last week's range is small, so the sellers are up here. That moving average is magnet on the hourly, okay? And that's the 20 EMA, which is around 4,001. But when the price gets away from EMA like this, I look to take profit, at least scalp a little bit, and then see if I can buy a pullback again. Pullback is the breakout point of bar 19 from bar 18 high. So I'm waiting to see if I can buy there. You have now an outside inside bar 19 and 20. Measure the range of bar 19. Bears want to test below bar 19. Buyers are waiting down there because it's the breakout. We're already testing the breakout point. What is it? Right there. Okay, so buyers are there. But we might come down a little bit, see if they can make it down and test the bar 19 low, and then see if we can trap the bears here somehow. Bar 20 is a sell signal bar, but it's not the most strongest one, right? Therefore, I look for trapping those who sold underneath 20. Now, I see 20 as a profit taking, not necessarily selling. So people might be selling underneath that, looking for a 5-point. First, they're going to look for a 2-point since ATR is a lot more than 5. Half of 5-point is 2.5. So you get about roughly 2 points. Since ATR is 675, you're going to get a lot more than that. So 2-point scalp is your minimum. One time the ATR is 6 3/4, so 5-point they should have already scalped. Well, let's see. Oh yeah, look at that. 525 to be exact. So you not only get your 5-point scalp underneath from 20, but that's not necessarily selling. That's profit taking. So if the bears actually close this bar extremely bearish, many more could exit. But the problem here is that there's a breakout point here, okay? And it's not the first breakout, it's the second breakout. Breakout 16, pullback 18, second time. So we know this area and underneath 19 is a buy zone. And that's kind of proving. So these bears who sold underneath 20, scalping 5 points is 21 ticks exactly. And exiting out, okay, is because they're paying themselves because they don't believe that this can be very bearish. And other bulls might be buying into that profit taking, that accelerate the bar to go up high. But I did say underneath bar 19 is a trap zone. So if you're selling, you're going to be challenged there. Now, bears need to close a bear bar underneath bar 19 to get a breakout, bearish breakout to continue to sell down. Now, where can they go? They might come down here, maybe 18 lows, but they have to have a bear body closing 1 tick below bar 19 low. And that's not guaranteed because this is still bullish, and the bulls have proven to us that they've been buying every pullback. Now on the higher time frame, do we have a sell signal bar? No. However, the way that I measure things, right, so this is a range. Trap zone, we just tested and rejected. But this doesn't mean that this is sellable. This could just keep going high up, up and up and up. So I'm not really interested in selling. Here I would have probably bought right there. I was planning on doing, but then I started answering questions. I would have bought here and I would have scalped. Market has to show me that bears are making money selling underneath bars. Okay, bears made 5 points, but they need to close really strong bear bar to show me that they're going to get continuation. They try to sell here. There's nobody selling here. They try to sell here. They failed. They got trapped. They try to sell here. They made a little bit of money, but that's about it. So market is bullish. It's trying to get to the 89.50 or high of yesterday. 4,000 is right up there. Yes, there's a negative gap here. Bears trying to close that. That gap kind of closed here, maybe open a little bit. So that gaps stay open, you can't really sell. Now, when can it get strong? Well, bar 22 needs to fill that lower wick of 21 with a strong bear body. Then they might sell towards right around here, but the buyers are waiting there. So I have to really see how bears are doing. That seems to be nice, but I prefer a second entry perhaps. So this is probably going to go back and test the high again. So that's actually good momentum for bears, but the bar hasn't closed yet. There's still 2.5 minutes. Hasn't closed yet. There's still 2.5 minutes. I'd like to see a little bit more continuation, at least for bears at this point. Maybe come down to the 18 lows. So I'd like to see perhaps somewhere around 72 to 72.50 tested. See if they can actually bring the price down. But it's part of the squeeze. It's difficult to sell. You see, the best way to sell is wait for a second entry. Now, if they do close the bar down here, then yes, we can come down towards 72 or 72.50 area. But bears really need to close this bar bearish. If it doesn't close bearish, we go back up and test the bar 19.20 high, and then I would look for a second entry sell. Can the bears swing this down? All the way to 39.50, maybe 39.40 area, 45 area. They could, but they need to show us a double top or some sort. Bulls still trying to push higher to take out the prior high, 21. and continue into the sell zone that I marked, or on the 1 hour. Okay, so you have two bear bars, both of them did not close on their midpoints, but there might be some buyers above bar 22. Since anyone who buys above 22, they're not going to go against too much of a bearishness, but this leg needs a second leg. Okay. So it's say that's the first entry long, second entry long bulls. If they do buy, they're going to have to commit buying above a bear bar 22. Or 22. So if you do buy above 22, you're going to have to scalp first and leave a runner. If you see a strong bull bar, you can buy again, add to your position. But I didn't put a buy order above 22. Maybe this was leg 1, pullback leg 2. So their buy orders activated already. If you buy entered 850, you're trying to get 81.50. It has to hit 81.75 to give you a solid 1 point. I don't like buying above bear bars like 22, and this doesn't really look like a good complex 2 legs yet. So it might still come down, so I didn't buy above it. I just simply don't like to buy above bear bars. And why aren't they going and getting their 1 point so quickly? If you entered 1 tick above, you get activated 80.50. It has to go to 81.75 to give you a 1 point solid scalp. It should give you 2 points since ATR is 550. But if you're struggling to make a 1 point quickly, that's the problem. That's why I didn't enter. But the bulls are still trying to get back up. Bears need to see failure, double top, and a second entry short. Very difficult to sell something like this if it's the first entry, but I didn't buy it either. Say 81.75 is 1 point scalp. They need to get that. Because if they fail to get that, it ends up being a 5 tick failure. Okay, it could quickly come down. But that's decent high one, or maybe high one is bar 20. It's a high close after a pullback. So technically I count it as a high one, and this is high 2. So let's see, 81.75. Are you going to get it? It's right there. See, it tested 81.50. It never tested 81.75. See, that's not a solid 1 point scalp. If I were to buy above bar 15, that would have been a good entry, and I would get my runner even run. Okay. And that's a failure. They failed. That's not, maybe machine scalped it. If they went for a 3 ticks, then they would need a 4 tick, which they got. I don't know how they scalp it. This is a terrible scalp for anyone who bought above 22. And you want your first scalp to be very fast, right? Because you're not going to enter the market with single contract. So it's a high probability entry. You want that 1 point very fast happen, and then you would leave a runner. Now they got it. Okay, so they got it. So they're scalping now. But if you were to buy, your stop would be down here, right? So it's still dangerous. So I did not enter there, but they got it at the least. So that's good for the bulls. They need a bull bar closing above 82 is get up here. Bulls want to test probably the high now. So they scalp 1 point. They have a runner. I didn't buy it. He didn't buy it. I want to see if we can actually come down. There's support somewhere around 39.75. 2 bear bars, so probably sellers above is 21. That's why you're getting this. Bulls want to test the high and break out and get to the measured move target. A bit of a resistance here. Look how much it sold. So even if we push higher, I think the sellers are waiting. There's a gap here. The bulls want to close that gap. That would get us up here. But it's struggling, you can see. That's a 10 point, I think. Let me see. Yep. All right, so that they're testing the highs. That's no longer a struggle. That's a breakout. Beautiful. So here it is. So anybody who bought here you're only buying this because this bar did not close on its mid with a bear. I don't like to buy above, so I would have bought probably there instead. But if you do buy it, you're looking for a 1 point. It was a difficult 1 point, but they made it. Then now they take out the high. They might even buy the pullback. But now we have a bigger wedge. 1, 2, and 3. And we just met the measured move target. High of yesterday is right there. We could easily take that out. There's a little bit more room to the upside on the hourly. We're also getting very closer to the 20 EMA on the daily. But it's a measured move. They probably will take profit. There's difficult now so anybody who sold and stuck, I didn't sell that either. No way I'm selling that. I needed a second sell. We didn't get that. Instead, we have a breakout. So now you're looking for a follow through. Breakout, pullback, follow through. If this bar closes bullish, we go higher. Bears need to show us exhaustion. I don't know if this is exhaustion. It's a breakout. But we are testing where I said we would test, and there we are. So if you bought this, your swing target we kind of reached that target now. Okay. Could there be a much bigger measured move? Yes. So if I actually take this entire range, that's nearly 4,000. So the market might be trying to get there. Or you could say, what if I take it from here? That's a little bit further up high. So right around here is measured move. So take the entire structure. Can the bears swing this down to 39.55, 39.45 if they get a major reversal bar here with bar 25. Remember, that's a wedge. Okay, so they need a reversal, 2-bar reversal with 25. and they need to close that bar closer to the low of 24. Then you have a neckline 22, okay, is market could come down. But that's not swing. That's just a wedge breakdown. That would be the first target. And the next target would be somewhere here or possibly here. That's how I got the 39.55. Now, this is very bullish. There's also impulse pullback, is another pullback. I don't know if this is done, this move to upside is done. But if it is, your earliest target is underneath 22. However, could be also like this, okay? Then impulse 1, 2, 3, 4. This right there is the target. But it starts with a strong bear bar as a signal bar to start a reversal. So 25, I mean, it's not the best, but look what happened with 26. It's a gap down at the open. So I don't know. Let's just wait to see if we can get continuation. Otherwise, you can't really sell it because bulls are buying every pullback. I don't know if the bulls are done here. That bar is, bears should have closed that bar down here. Then it would have been sell, sell, sell. It would be very quickly, we would have been down here already, maybe testing 22. So that's a breakout, pullback to the breakout point. Not a good bear bar close, but it did gap down at the open. So there were some machines selling that because 25 still a really strong bear body. But it's an inside bar. Bears may want to test the 25 and 24 low at the least. So I like to see a little bit more continuation to downside. 79.25, they will on the micro probably want to test it. If they can break down, then you would have a 3-bar reversal. But the bears need a continuation bear bar closing a lot better, taking out the 25 low, coming all the way down to the 24 low. That would create a 3-bar reversal or multiple bar reversal. Failure to get a second bear bar, I don't think we will fail. I think the bears because I'm looking at the higher time frame, it's also trying. But if this bar fails 26 to close bearish enough, then the bulls will want to test the prior hour's high. And that will bring us right back up to the magnets high of yesterday, measured move, and 4,000 round number. So bears need to show us that they can sell this. They can take out the 25 low first with a bear body and come down and test the 24 low. If that's the case, you have a neckline here. Okay, we could end up coming down there. But you can see it's not that strong selling. It's not that accelerated. 89. Oh, you mean the earlier one? Yeah, so I looked at right here, the structure. And there's a bull body breaking that structure, double top. Instead of double top, they try to sell it, but you can't sell a bad signal bars. These are good bull bars. But since the bulls are taking that out, and we now have a pullback, the midpoint, and a swing that was 89.25. They just hit it right at the tick. Bears really need is to do better here. Second bear bar did take out the 25 low. It didn't close all that bearish, but it might get a second leg down with 27. Market is reacting to my sell zone. Bulls taking profit there. But it's not that bearish. Now, if the let's see. So I counted from here. If we break this trend line, okay, right there. If we break it, we're going to come down to here. That. And we could bounce from there strong, but they have to break this. You see, this trend line is still holding. From there. See, it has not broken, so you can't really sell it. You need to be broken. That's 2-bar bulls, so you know at the breakout point, limit order buyers waiting. So they did try to buy with 26, but it's not that strong. It didn't close as bullish. If we get a bear bar, okay, so that's first entry, we would get a second entry, then it would get us to here. Many bulls are stuck there, but if they're not counting wedge, they're going to be punished because these bears want the second leg down, okay? So all the way until here, bears come down and bulls may not show up, especially if the bears break this trend line with a bear body. But limit order buyers are still here. Market is bullish. Quite a few stuck up there, but at this point, that was a take profit. You really needed to take profit. That was measured move. Another reason why is bulls might exit, bears might sell. So it looks like it's breaking, but that doesn't mean that it is broken. You could just go right back up again, look for a double top, and then sell. Unless if this body closes strongly bearish, we could still go back up and retest the trend line and then sell. Okay, so it's not yet strongly bearish. But that's basically the second leg in a way. Bears need that break. What I'm demonstrating here is the wedge setup. Okay, so the last push of that leg started here with bar 22. So market may come down and test there and bounce, but bears need this bar to close bearish enough. Okay. I ended up selling underneath 26, and I'm scalped a little bit there, and I'm running one contract because I like what I see on this right here. You see that bar where the body closed? So we will get continuation. However, you see, bears sold above that bull bar. That's the proof. You see that bear bar on the 15-minute chart? They sold there, but they're stuck. So they want market to come down to at least to the high. That gives me 39.75. That also gives me 39.75 right there. So I like to see bears push this further down. When you get a breakout like this at the trend line, always expect a pullback and then sell if you haven't sold yet. And you can see the bar 28 high is a pullback. All right. So is I have a 2-bar reversal here. The problem here is that bears trying to get here. The problem here is this breakout, and they use this as a support. It might still act as support. So I think the buyers are waiting as early as 75 area, or it can actually come down a little bit further to 73, 72.50 area. For bears, 15-point is around 75 or 75.25, I think. Let me measure it. Yeah, that's 14-point. That's it. So they might go for 14 rather than 15 and scalp. See if they can push this a little bit more down. $14 is average. 15 is right there. That's my target in between. When I start to do something, I go all the way, Jasper. Meaning, it's been my personality. I dabble in a lot of things because I'm so curious about things. So I like to learn. Okay, but I'm a self-starter. I don't really learn from others much, so I try to learn it on my own. But when you're trading, it's not the best thing to do. But it kind of helped me, but a lot of screen time. So I sat and I watched, and I take a strategy and I work on it. I traded, back tested on months and months of worth of continuous charts days. Once I see common approach, or that strategy is giving me 80%, okay, same results, or even more better, that's a high probability strategy, and I will use it. And wedges that they're taught in the Brooks trading course is wonderful strategy. And I marry that with Wolfie Waves, which helps me find exact targets. Along with my point counting, I easily scalp, and I'm always in the green. So it took me a while, but especially when you start to marry several different strategies together, because you kind of need to know where you need to take profit. And once I see what the machines are doing, okay, I'm going to do the same thing with them. So, I don't know wedges, I already knew about them, but not as that they were a wedge before I started taking the course. I used to call them something else, but I was familiar with the concept. But it helped me see the bars that create the wedges, or what to look for, how to sell, which bar that I should sell underneath. The course helped me a lot. So it takes a couple of years, I guess, to really get there. I'm just waiting for bears to get to my target. It could sell a lot more, just so you know. This could actually come all the way down, all right, if the bears can really, in about 8 to 10 minutes, close a strong bar, or after closing a strong bars underneath this line, we can end up finding ourselves all the way down here. But first, I will take profit here. All right, I'm scalping there. But very nice. Look at that. It should bounce there a little bit at least. I sold underneath 26. I could have sold underneath 25, but I didn't like the way the bar closed. I didn't like that lower wick, but it did take out the 50% of 25. So at that point, I'm looking at here. Okay, so what's creating that bearishness other than being a wedge, obviously? But can this go back up again strongly? Then I saw this. I'm like, oh, okay, that's good, because I know exactly where we're going. Right there, it is to the top of that bar. You can see that bear bar went above this bar's high, and it sold. So we know some bears are stuck, and they want market to come down from a sell zone. So limit order sellers are there. Stop order sellers jumped in underneath that 15-minute bar, which is closed phenomenally. So when the limit orders are making money, stop orders making money, they're going somewhere. And I go to my 5-minute chart, I see a channel. If the channel's failing because there's a wedge, I count impulse, pullback, impulse, pullback, impulse. First target, if we break below this, we're probably going to come down here, might even come down here. But along the way, I will take profit, and I took profit right there. Market was a lot more generous. It filled everybody's orders by going below that projected target. So basically 22 is your target. So you could take profit right there. I'm just giving you visual cues that you can remember next time. It went a couple of ticks below to fill everybody's orders. So everyone, today Brad is going to join us, and I promise you I will not quit on you. I will not close the session. I will exit out, but please stay. Very nice. You can see that it's coming down pretty strong. So at this point, you would have a runner, okay, running, but I would still take profit. This bar has to close below this line. It's running, but really needs to close bearish, okay? Because it could just bounce. It's been leg 1, pull back, leg 2, pull back, leg 3. There's a wedge there. If you don't see it, go to 3-minute chart. It should be a lot more visible. Leg 1, pull back, leg 2, pull back, leg 3. And if the machines see that, then this is what you get, right? Impulse, pull back, impulse, pull back. Where do you think we're going to be running towards? If this starts to move, we could go all the way up there, okay? Somewhere here, we could pull back, and you don't want to be stuck in that. But if this closes bearish, it is possible that it could continue to come down more. It's trying to overlap with this tight trading range right there, okay? Well, first I study. So basically what I do is this. So I look at the charts a lot, okay? I look at the charts to see what the first 12 bars, did it open gap up? Is it testing prior day's high? Can I look to sell and swing, you know, first 12 bars or 18 bars or 24 bars, right? 18 bars is an hour and a half, is 24 bars is 2 hours. So you're gonna get some kind of a swing. Same thing here, right? So it's a market was bearish. It is going sideways. So it must be looking for a bear flag, right? I'm gonna be very careful when I'm buying. I see a double top bear flag. I see this line tested. I can sell. I can look for a measured move target of some kind. If the measured move target fails, we go significantly back, it's still going to come back down because a lot of people are stuck here. They're going to sell at the EMA, but if we start to fail, I will buy and swing. So I test these, but and I'll tell you this is the quickest way that I have learned the Brooks ways, Brooks methods, and started to apply the charts is when I have my purchased access to Brooks Encyclopedia. That's my favorite because everything's organized so nicely in there, and it literally points out which bars I need to bar. Then everything becomes like a full circle, okay? So I go in there and I study because everything's put into categories and then subcategories. Everything's outlined with multiple samples of charts. Like you just keep looking at the same thing, you never forget it. It becomes a movie line that you recite over and over. So but let's say I'm looking for wedges, and generally when I have, wedges can be 1, 2, sometimes you get this overshoot. You get an overshoot like this, that's going to come down to here or there. That's a swing. Or you get like this, you get a short one, then I look for a double top, and then I look for A, B, C, D, or 1, pull back 2, or 1, 2, 3, okay? That kind of a move to there, and then there. So that's what I look for and I look for moves down, right? Like for example here, impulse, pull back, impulse, pull back, impulse, right? Leg 1, pull back, impulse is the legs. Leg 2, pull back, and leg 3, right? So what am I looking for? First of all, I immediately draw my trend line right there. That's it. Do it right so you know what you're looking at, right? So I have a trend line. They try to test the highs, but they failed. They break with the bar 13. I got a double top, wedge, and a break. Where do you think it's going? I have 2 targets. From the impulse leg ends and the correction begins. 1 impulse, second impulse leg ends and a correction begins and ends. That's the correction ends. That's my scalp target. I'm going to scalp that. My second target is there. I might scalp that as well. There's a gap there. Market tried to close that gap. It kind of failed. And then the pullback begins. Impulse, pullback, impulse, pullback, third leg up. There's a wedge there too. Now you can trade that, right? So there's one here too. Look. Impulse, pullback, impulse, pullback, impulse. So where's the target? Correction leg to there. That's the first scalp. And then it's probably going to go there, or it might even go somewhere there. But it failed. So that's a pullback, right? It's creating a lower high bear flag. Now look. This market is giving you all sorts of. This is a 3-minute chart. You can see that on the 2-minute chart even better. Look. Watch this. I'm going to go in a minute because I know Brad is trying to get in, but I want to show you how easy it is to trade both sides of the market, one after another one. Even in a micro environment. Okay, so here. Look. Impulse, pullback, impulse, pullback. Ooh, failed. So this must be coming down. Where's it going? Well, here's the first correction, began here and there. Here's the second correction, began here, somewhere in here. And then I have this trend line. Okay, so market is going to probably come there, might even test there, and then take profit. But if that trend line is broken with bear body, and then the target line is tested, bounce, but you get another bear bar, your next target is there. So you're going to take profit with bar 45. Again, this is a 2-minute chart, okay? You're going to get a lot more on the 5 minutes. So here we go. Look, impulse, pullback this could be that another impulse and a complicated one, right? So here we go. Pullback, impulse. So now I'm looking for my trend line. Maybe I can do better. I can take that. There's another. I can also do this. So I'm looking for is, if I'm buying this, I'm going to take profit there. If it fails, it's probably going to come down. If I see this is still going down, I'm not going to buy, right? It's still going down. This is the last impulse leg, right? So I'm looking for now reversal. What happened there? It's still going. Not going to buy it. There's nothing to buy, right? Because if you actually put another trend line, there's a bunch of other legs here with impulse, pullback, another third leg. But nothing is going above that trend line. So it's still coming down. It's going to reverse soon, but it's still going. Then I start to look for brand new one because this is a lot more complex. So I'm going to delete that. I'm going to look for now. Okay. This is probably first correction. This might be a second correction. Maybe there, right? Somewhere there, sorry. So this is the final leg, okay? So now I have a much larger, I could take that as my trend line. My first, if I buy it, my first target is that trend line, okay? But really, I want price to get up here. This is the actual swing target. But if that trend line holds and sends the market down, it's because it's probably looking for, okay, a double bottom. It's probably looking for a double bottom. Nope, it actually broke it. So that means this impulse, final impulse leg never ended. That means this is the correction. Let me do this again. So I could say maybe this is the correction, first correction. Okay. This is the second leg and second correction and a final leg. Okay, so now what? Now I can take this, right? So if this is the correction, this right here is my projected target line. Look, market actually went there. Rejected a little bit. They took profit. But really, where is your target? This is your target. Right there. Market goes to that target, takes profit, and then swings again. But you're doing this on a 2-minute chart. If you did that on a 5-minute chart, it's a lot more probably cleaner. There it is. Right, this area. And I take this and I apply it almost on everything, even 1-hour charts, tick charts, but I like the minute charts better. This is a one big impulse leg down, correction. Second leg down, correction. See how cleaner it is? And a third leg. So you got a wedge here. What am I looking for? I'm looking for an ABCD pattern. A, B, C, and D. Okay, so, or I don't even do that. All I do is from where the first correction began, it's going to work. There it is. Where it is. Oh, here we go. Where the first correction began, this is the first correction high. Second correction ends right there. So first leg, impulse, correction leg 1 to 2, second correction, second impulse. 3 to 4 is the second correction, and that's 5. So basically 1, 2, and third leg. Second leg ends, the correction begins. This is where my projected line, 1 to 4. And then I also put a straight line. Whichever comes first, I will take profit. Look, BART 19 is first to test this, and immediately they take profit. But they keep going because projected line is so very close. Right there. They even met that target before coming down. So go and apply this on 30-minute charts, 1-hour charts, daily charts, which we have is, which we used that target before. Look, I have it. Today we found this. Impulse, correction, impulse, correction, impulse. Where's it going? Well, where's my projected target? This is the first correction leg begins, and the second correction leg ends. That's the projected, this is the horizontal. So if the bulls can get it together, okay, and if they don't need a deep pullback and a double bottom, even if they did, this is where they're going to end up going anyway, okay? Unless they break this low and it continues. That means your third leg is not complete yet. That's going to go. But look, this is my projected from a much bigger structure. This is for the bears. 1, pullback, correction. 2, pullback, second correction, and a third leg. So from where the correction begins and the second correction ends is my projected line, but my horizontal line is the first target. When the market was selling, what did I tell you guys? I said, we are going to take profit somewhere here. And we did. I ended up buying there and swinging. So this was sell, take profit, and then buy. Two-sided trading. All right. You guys have a great day. Don't exit out. But I just want to check one thing. Where are we? Are we swinging this? Oh, yeah. Look at that. 50% pullback from yesterday's low. Way below. We're actually going to the 66% pullback. So now we're still in this trading range. So what did I say that we would go down to? Did we reach 55? Oh gosh, yes. So this was a swing to 55. If we break 55, we can continue to sell into 45, maybe even 43 area. Okay, so this could continue. Why is it going there? It's right there. The answer is in front of you. Look, there is a channel here, impulse, correction, impulse, second correction, final leg up with complex push. So now this is your projected target, but I'm going to do it the right way so you can see it. Okay, so projected is right there. Did they tag it? Yes. Are they taking profit? Yes. What can this do? Well, if the bears actually fail to break that, okay, they can end up going. There must be the similar setup here, wedge. Maybe 1 pullback, 2 pullback, 3, right? So that means 1 pullback, correction, 2 correction, and final leg. That means it's trying to get up to this trend line right there. And we might end up going there. Not at the one go. It might do a double bottom, but it's probably going to reach this line. All right. You guys have a good day. Tomorrow I will be back, I think. Let me check that real quick. Yes, tomorrow I will be back, 21st. And then Tim Stout on Wednesday. and then L is on Thursday, and then I'll be back, and Brad will be back on Friday. Have a great day.
All right, so we're selling off, and we're at the open of the day here. So we found buyers at the open. And what I think is interesting is I think the market wants to see what is below Friday's low. On the 60-minute chart, it's a second entry short. And I'll wind that. 1 second here, 20, 22, close. But anyways, we have a second entry short on the daily chart, and I think the market wants to get down there. For me, my hope is we do get down there. But right now, I think that this is a strong enough bounce that we're going to get at least a small second leg, and we could easily test back up to here. But tight bear channel, first reversal up will probably fail. But if you're short, where do you put your stop? Well, reality is you probably need a fairly wide stop. So still always in short, probably going at least a little bit lower. But that tail is a warning that traders are beginning to take profits. Bulls trying to get the upside breakout, but fairly tight channel, and that will limit the upside potential. But reasonable for bears to exit, probably going to get at least a few legs up before we get a second leg down. This is damaging to the bear case though. Market's testing the moving average and the breakout point. This is damaging for the bears. But when you look at this sell-off, the sell-off is stronger than this pullback. But this is a warning that we may go more sideways. We're still probably going to get at least a small second leg down. What are the chances that we get to the low of Friday? Well, I'm less certain about it now because of this bounce. However, the bulls need to get more. Can the bulls get 2 or 3 consecutive bull trend bars? Can they get a big bull trend bar? Right now we have big up, big down, big confusion, probably going to go more sideways. "15-minute chart right here shows it pretty well. Strong enough sell off, probably at least a small second leg down, likely. So this is probably more of a minor reversal than a major reversal. And minor reversals typically means that the market's going to go more sideways than straight up. All bar, you can see some traders sold it, but tight channel to the upside, that will limit the downside. But still, probably minor reversal. Bears selling above bars, scaling in, and the market's probably going to go sideways here. So as far as buying the close up here, I would not. To me, I think the odds favor another test at the open of the day at a minimum. And, if the bears were lucky, maybe we'll test the low of Friday, which is this blue line right here. But probably buyers below in a small second leg, which means probably sideways for at least a few bars. Bulls trying hard to get an endless pullback, but right at the moving average, and that will limit the upside. We're also at an obvious target. We're near it, the low of this bar. Let me turn on the bar counter. I just realized that's not on right now. There we go. So as you can see, we're getting close to the 31 low. But to me, this is good for the bulls, but probably going to go more sideways here. but it doesn't increase the chances of the first reversal down failing and leading to a trading range more than a bear flag and going down to Friday's low. Doji bar, so a sign of hesitation. The bulls, they want an upside breakout and a test back up to here. And they might get it, but right now, big up, big down, probably sideways. So probably a second leg down and probably a test up to here as well. And to me, this is stronger than this rally to 38. But this is certainly a disappointing pullback for the bears. And that will increase the chances of any bear that's sold down here and scaled in looking to get out around their first entry, which means probably buyers not far below. But trading range day, reasonable to expect the market to at least go a little bit more than, one or two ticks below the open. Open of the day, 54.5, low 50. Let me see that again. Yeah, open 54.5, and the low is 54 even, so we went 2 ticks below. I think we probably will test the open of the day at some point again. So low one short below 39, but probably buyers below. Bulls trying to get the upside breakout. Trying to close above the 31 low. That'd be good for the bulls. But let's see how this bar closes. Bulls trying hard to get their breakout. Looks like we're going to try and test the 25 low in the 24 close. It would be good for this bar if it does not pull back much. The bulls have a breakout. They've got a breakout above 40. And if this is going to be any good, they need to trap the bears. They have a breakout here. And there will be bears that sold the 40 high. So it's important to see here. If bears are short and scaled in, are they going to get trapped on the way up, which would increase the chances of higher prices? Or are we going to pull back soon? If we pull back to the 40 high, that would allow bears that sold and scaled in to get out break even. So if I'm a bear and I sold and I scaled in here, I might be thinking, I don't know, maybe I'm trapped here. And if I'm desperate, maybe I'll try and get out break even. So the bulls need this bar. The less this bar pulls back, the better for the bulls. The more it pulls back, the more bears will be able to exit around break even or at their first entry, which is not what you want to see if you're betting on breakouts. Trading range, you have to assume something's going to be disappointing here. So not really pulling back all that much, that is good for the bulls, and that will increase the chances of higher prices. Very often, when you get a tight channel, one of the problems the bears had is when you get a tight channel, typically traders will, there will be some traders who buy the close and, they buy here and they use a wide stop, somewhere down here. A lot of traders get out. Let me explain it like this. So typically, a lot of traders know the market's probably going to get back here. Therefore, or it's going to bounce enough to allow them to buy, scale in, and get out break even on the trade. That's what gives traders confidence to buy all the way up, even in a channel. And if you're a bull, it's not all that unreasonable to buy this close and do one of two things. It's not a great buy the close bar because of consecutive buy climaxes, but if you do buy this close, there's two ways to manage it. One way is you get out below 2 or 3 bear bars, so maybe you exit here and you look to buy again lower somewhere down here. Or you buy here and use an incredibly wide stop, below the day's range, and you wait for a bull bar. Would you buy above that bar? Probably not. Probably, maybe buy above 36 right here, and break even takes you to right here. So the odds are, at a minimum, we're going to go to this price and allow those break-even traders out. And it's really going to be, I don't have it drawn perfectly, but it's pretty close to where we are. So probably, even if we do pull back a little bit, probably going to go at least a little bit higher. Okay. We're breaking out again to the upside. Looking good for the bulls. Probably going to get to the 24 close. Well, I think it's reasonable that we're going to get to the 24 close. My one concern is the market's in a trading range. Therefore, traders will expect disappointment. Big sell-off, big rally. You can argue, I saw someone asked about, is this a V bottom down here in the Discord? And I will take a look at the Discord questions soon. But I'm in a trade right now. And sometimes when I start looking at Discord, it distracts me more than I want to be distracted. But it's a down, it's basically, we tried to form a bottom here, downside breakout. And, the problem with this is you can argue it's a V bottom, but when you really think about it, we tried to sell off, we tried to bottom. Give me just 1 second here. So disappointing tail on this bar. But anyways, let me just go to a 1 minute chart and I'll explain it. So we tried to bottom several times, and we got a downside breakout, small second leg, and an endless pullback. So you can call it a V bottom, that's in part true, but the reality is even this doji is a bottom attempt. And whenever you have a trend such as a rally, even though it's fairly tight and it's a lot of overlap and it looks like a leg in the trading range, very often it's a breakout on a higher time frame. Like I said on the 15-minute chart, we have a tight channel and then we have 3 big bear bars. Well, if we go to a 30-minute chart, here is that same tight channel. So this is really just a trend line break, which increases the odds of buyers below scaling in higher. The bears had a chance to get a second leg down, and they still probably will. I'll talk about the 15-minute chart in a second. The bears had a strong enough breakout to get a second leg, and the reality is they're probably going to get a second leg because even if the market stalls, rallies all the way to a new high, there's probably sellers above. When you get a sell-off this big, it limits the amount of traders willing to bet on breakouts. In other words, this is probably going to be a trading range. And if it's going to be a trading range, a lot of traders don't want to buy too high in the range. Minimum follow through, 42 is a bull bar. That's good for the bulls, but there's a tail on top. And that tail is a reminder that the market's probably in a trading range and therefore probably not going to go straight up. But there's probably buyers below the 42 low scaling in lower. So still buy the close, tight channel, but you need a wide stop. Right now, traders want a measured move from the low of 33 to the high of 40, projecting up to here. So to me, I think we're going to get to the 24 close. What I don't know is the path. Do we go straight up to the 24 close? In other words, the bulls that are long here, they're hoping the market goes straight up. However, one of two things will probably happen. Either we go straight up to the close right now or in the next couple bars, or we pull back and traders will scale in lower. And that is why it's really important to be able to, that's why I would never trade 1 E-mini versus 10 micros, because the reality is if I could trade 10 micros, I could at least be long 2, 3, or maybe 2 or 3 micros right here. And if we go straight up, I'll make something. And if we pull back, I can scale in lower. Versus if I'm just in, You know, if I bought one E-mini, just in other words, one lot, then I can't buy more lower. And that drastically makes things much more difficult versus being able just to be in one position and buy another position here, another position here. That can make things a lot easier. Another target is Friday's high, which is this blue line up here. I'm going to make it blue. And I'm going to make this actually purple, magenta. This is going to be the 24 close, which I think the market is going to try and get there. Another target is yesterday's high, which is Friday's high, which is right around 4,000. You can see traders bought and some of them scalped out. Some aggressive bears are selling, but fairly tight channel. You know, just look at a 10-minute chart. 10-minute chart, we have not even had a bar closing below 50%. So strong rally. But the problem is, again, big sell-off, big rally, probably going to go sideways. You know, if you're a bear and you sold anywhere and scaled in, what are you thinking? You're thinking, gee, you know, something's not right here. Maybe I should. And because of that, a lot of traders that sold and scaled in, I think most would exit because, you know, I've talked about this a couple of times. And even though the odds are, if you sell this high and scale in higher, you know, you sell here, sell more below a bear bar, you know, somewhere up here, you're going to be able to avoid a loss. But the reality is, if at any point you think this bear breakout here is a leg in a trading range and not a bear breakout, in other words, you think these gaps are going to close up here, it makes sense to get out. So if I'm short and then I see this bull bar closing on its high, that does increase the chances that we get up to here, especially when there's two bars. So if I just take a loss here, I can wait to sell again. And if I'm a bear, I'm not selling anywhere in here. The channel up's too tight. Therefore, if I'm a person, if I'm a bear, it'd make more sense just to buy and go long somewhere in here, catch something on the upside, wait for the market to weaken, and then look to sell. So I hope that makes sense, but that's kind of how I think a lot of traders think of gaps. In trading ranges, gaps close. You know, we had this over here. The market broke. Let me go to a 5-minute chart. I just forgot I was still in a 10-minute. So still always in long, probably going higher. But anyways, the market sold off with 3 consecutive bear bars on Friday. And it was reasonable to sell the close here. But you're selling in a trading range, and therefore the market may stall at obvious support. You know, the 27 high, 27 close somewhere. And then the market got a doji, and then the bear bar, and then this bear bar, and then the bull bar. And everybody started buying back shorts once this bull bar happened, because this bar reminded traders the market's in a trading range. This bar also reminded traders. And when the market's in a trading range, traders don't want to sell too low. They're willing to sell low when they think the market's becoming a trend. However, you know, it'll be the same thing here. Even though yes, this looks great for the bulls and it's demonstrating strength, all good things. The reality is this is probably going to be a bull leg in the trading range. Now, I could be wrong, and we could just race up and close far above yesterday's close. You know, I'm certainly not selling here. You know, if anything, the only thing I'd be doing is buying. But we're getting very close to obvious targets, and because of that, traders are going to be less willing to buy up here. Let me just fix one thing. And the reality is this probably will be some sort of bull leg in the trading range. And I say that because bulls are going to be disappointed. Therefore, what do I think is going to happen with the 40 high? I think it's going to close. Now, I'm not going to just sell here and bet that the 40 high closes, because this is strong enough that the market's going to probably have to go sideways at best for the bears. And if the market, you know, if I'm selling and the best case is sideways, then the worst case is a strong upside breakout and, you know, some kind of measured move. And because of that, a lot of traders will just simply stay flat. You know, I think one of the big mistakes traders make, we all do it, is being too aggressive. In other words, we think this is a leg in a trading range, so that means, this is a strong enough rally. Any sell-off is going to be a leg in a trading range. So we just start buying below bars, scaling in, saying, yeah, I'm going to buy the 30 close. It's probably going to be a trading range, therefore I can buy and scale in. But this is so tight, the bears are going to get a second leg. So it's kind of dumb to buy here because at the very worst, best case, the market just goes sideways. Worst case, you get a big second leg. So instead of buying here, wait for the second leg and you can buy at a much better price. It's the same thing for the bears here. Sure, you could sell here. And the reality is if you sell and scale in, 2 or 3 times, you're probably going to make money. But why? Why not just wait for the trend, wait for the bears to demonstrate strength because the best thing they're going to get is sideways and then look to sell. And that's kind of a patience thing. It's like, here, you want to buy down, you want to buy these lows, but don't buy after 3 bear bars. Wait for more buying pressure. So this converts it into more of a trading range. Then you get more buying pressure in here, and then bulls start buying. So traders using this bar to take partial profits, or if not full profits, but still fairly tight channel. If you look at the slope of this rally, whenever you get a bigger bar, it's climactic. We rallied sideways, rallied even stronger sideways, and even broke higher. So the degree of this slope is increasing. Whenever you get these kind of bars where it's just a sudden surge, traders quickly, and computers can do it a lot faster, they will start selling and they'll start taking profits because they want to take profits on extreme momentum. So to me, this is a profit-taking area for both traders, but still a little too early to look to sell. We could easily get above the 20. We probably will touch the 24 close. We're probably going to test here. And we're so close to 4,000 that we could easily test that as well, which is this green line right here. So here is 4,000, big round number. I think this bar is more profit-taking from bulls that bought this close and scaled in. This is close enough to their entry price, and those bulls are disappointed enough that the market's probably going to go more sideways here. What about shorting here? Some traders will. They'll start to sell and scale in. But the question for me is stop placement. If I'm selling here, where's my stop? At a minimum, I don't know, it's probably 10 points above here is 97. So if I'm selling here and I use it, 10-point stop above the high of the day, do I really want to put a stop 2 points below 4,000, the big round number? Probably not, because we could easily just vacuum up to 4,000. Therefore, if that's the risk, then you probably need a wider stop. So if anything, I think traders, institutions, if they're selling here, they're probably selling more at the 4,000 round number, and that makes that just too difficult of a trade for most people to take. Therefore, I think it's easier to wait for more selling pressure. Typical trading range price action, and what I mean by that is we're in a trading range. We have an obvious magnet, the 24 close, and we get this big tail. And one of the things that's important to, it just takes a long time to really think through it, is understanding that tails are breakouts on smaller time frames. So when you see this tail, I mentioned a lot of traders will take profits up here. Part of that reason is because it's a bear breakout, and therefore if they sell, this gets kind of a little aggressive, but traders will do it. Some traders will use this bar to sell over here, and then they expect a couple of legs down. And that is why they will do that, just in case the market does form an endless pullback, and they can sometimes buy again. But either way, still always in long. But the main thing I wanted to say is it's always in long, and we're hesitating at just under the 24 close. And because of that, you have to wonder, is there something wrong with this bull trend or bull rally? It's always in long, but something is not ideal here. So traders buying below bars and scaling in. This is the first bar to go under a prior bar since it's the entire rally. So this is a pretty extended micro channel since 33. That is a sign of a strong trend, but it's also climactic. This is 33 to 47 basically, or 46. That's 13 bars. How often do you see 13 bars with a low above or at the high of the prior bar? So that increases the chances of a deeper pullback. Either way, probably buyers below scaling in, and we'll at least get to the 24 close. It's a measured move target, low of 33, high of 40. Takes you to that same area. So someone asked way earlier around, would you view this sell-off right here as a V reversal or just two legs up in a trading range from Friday? Or just two legs up from Friday's bar 78? Oh, okay. So would I see this as a V reversal or a V top? Not really. I guess you could argue it's sold off and it's two legs up. To me, it's consecutive topping patterns. It's a wedge. 1, 2, 3, 1, 2, 3. Expect 10 bars and two legs. However, in this case, we got more than 10 bars and two legs. That's how I would view it. My problem with, I'm willing to buy pullbacks and buy these closes and scale in. But if this is leg 1 and this is leg 2 or leg 3 or leg 1, leg 2, and then this, to me, 24 is a big bar and it's bigger than all the bars really to the left. And the body's pretty big and it's coming late in a trend. Therefore, there's an increased risk of that bar being more of a biclimax. And if it's a biclimax, it's probably going to test down to here. Therefore, or even down to the 22 low. So that's why I would not be willing to buy up here. There's another question. Brad, do you know if Al is going to the Traders Expo in Vegas on the 24th? He usually does to give a lecture. Yeah, I don't know. Maybe that'll be something that'd be interesting to find out. But I do not know if he's going to the Traders Expo, although I know you're right. He often does like to go to those. Someone asked when's the next workshop in Orlando. I think I don't know if there's one scheduled right now. But who knows, there could be one in the future. So starting high 1 buy 47, but more sellers above than buyers. Still high bull channel, probably buyers below scaling in. This is minor. Traders selling above 47. To me, I wouldn't do that. It's pretty aggressive. The channel up is so tight, probably buyers below scaling in lower. Therefore, it's really better to look for the buys more than shorts, because we're probably not going to pull back all that much. Bulls buying the pullback. Some traders sold the 43 high or the 42 high and scaled in, buying back shorts here. So to me, this is a buy zone more than a sell zone. Some bears selling above 45, scaling in, scalping out below. More likely, we're going to try and get to the 24 close at a minimum. Again, this hesitation below the 24 close is important. And it's a reminder that the day we have is more of a trading range day. $48, a bear bar. However, let's see, can the bears get another bear close? 48 is a little bit of surprise, maybe a small second leg, but to me, probably traders buying the close of 48 more than traders selling. But the size of 48 may limit, it's a high one buy on 49. You can argue it's a high two, high one with 45, minor pull, and then just a minor new high, and then therefore a high two on 49. And that's true. But I think the size of 48 might limit bulls buying above 49. But even if it does limit the bulls buying above 49, the bears, I think realistically, best case the bears can get is maybe a small second leg down, and then we reverse up. I think it's going to be hard for the bears to get, and because of that, some bulls will just buy and then just buy more lower. Therefore, that is what increases the risk of the market going just straight up. High one buys are generally good limit order fades. So let's find one. Fix the scaling for a second. Here's a high one buy. Traders sell it, scale in, make money. But high one buys and strong breakouts are a different story. So you can argue, maybe that's a high one, but it's a micro channel. Yes, some traders will sell, a measured move up of the bar, maybe 2 times the size of the bar up and for a quick scalp. But the reality is, high ones in strong bull trends, traders buy above it and buy more lower. Therefore, it's lower probability fades. And that's kind of what's going on here. 49 is becoming a little bit big of a bar, so it's making it more of a tight trading range with the past 4 or 5 bars. But again, this is a fairly strong trend since 33. Let's just look at like a 15-minute chart, or even a 10-minute chart. Strong breakout, probably at least a second leg. But 48 is disappointing. That's kind of what I was talking about. 48 was a big bar, and 49 got too big, and traders sold above the 48 bar. Bears are trying to get a breakout below the 49 low, and it's basically a tight trading range for the past 5 or 6 bars. The problem the bears have is it's following a strong upside rally, and if I'm selling below a bar like 48 in this context, I really want the entry bar, which is this current bar 50. I really want it to be fairly strong, and this bar is spending a lot of time around the midpoint. So you have to wonder, is this bar going to close on its low, or are we going to reverse up? And if this bar hesitates for too long, you will have more and more traders that sold below 49 exit. A lot of stop entries, you can take, most stop entries are really quick to exit. Traders take them. So even if you buy above 22, it's a high one buy late in a channel. It's not a terrible buy, but it's not ideal. And the trader that took it, if they're, they can quickly scalp out during 24 or exit as 25 starts to turn down. Same with any of these really. Bears trying to get their follow through. So far, looking good. But still 1 minute left in the bar. So this will be important. Can the bears get this bar to close on its low, or will the bulls buy into the close of this bar and reverse it up? Often in the final minute of the bar, it can look entirely different than what it did even halfway through the bar. So important to wait for bars to close. I suspect something will be wrong with this bear bar, and you can see looks like traders are starting to buy back shorts, and bulls are buying aggressively to go long. So it's kind of like a failed break. You can kind of see on the 1 minute chart, it's like a failed break. It's a failed breakout below this tight trading range, and you can see more and more traders giving up. So if I was a bear and I sold below this and I put my stop above the bar, I'm not going to wait for this stop to get hit. I know the odds are it's going to get hit. Therefore, I know we're going up to here. So if I'm selling below here and it's a low probability trade, why would I wait for my stop to get hit? If I'm selling and I don't get immediate follow through, I want to get out. You know, it's kind of like selling below 32. If I sold 32 and low in a trading range and the market it breaks the downside and starts to pull back, and let's say I'm not out on the 33 close, I know the market's probably going to pull back soon because of this tail. That doesn't mean I'm going to wait and put my stop up here and wait to get stopped out here. You know, if I think it's in a trading range and I sold low in a trading range, I'm going to exit. And a failed breakout is a trading range. So if I sell below this bar, 49, the market breaks the downside and starts to turn up, that means I'm wrong. It did not break the downside. Therefore, it's either a trading range, it's either a low in a trading range or the start of a bull trend. In other words, it's going to reverse up. I don't want to stay long. Excuse me, I don't want to be short if I think there's going to be a reversal up. So that is, you know, my whole point behind that is when you think your premise is wrong, get out before your stop gets hit. So the bulls trying to get the upside breakout in the second leg from this rally probably will get it. You know, I've been saying for the past, you know, all through here, we're probably going to go to the 24 close. Why? Because the market typically in a trading range will test the high close of the day. Bulls buy the close, they buy more lower, they get out. Yesterday, low close of the day, bears sell the 27 close, they sell more below a bear bar, they get out. Now, I don't think, you know, the reality is, I don't think most traders simply just sell this close and they just hold, you know, like they hold through all this. But I do believe that traders, you know, they sell this close and then maybe they just get out here and they take a small loss. But they know it's a magnet and they look to sell again below a strong bear bar. Bull bar, traders buy, they're disappointed, they take a loss, they wait for all of this, and then they wait for confirmation the market's in a trading range, and they buy above a bar like 36, they buy above 40, betting the market's going to test the 24 close. You can see disappointment. Bears sold the high of 80.25, which is bar 50, and the market is trying to test that high. So the low of this pullback is 81.25. So disappointing. You can see the bears sold a 50 high and scaled in, made money. That's a sign of more trading range price action. Still think strong enough breakout, probably at least a small second leg up. The bears are trying to get the downside breakout, but the reality is probably minor, which means probably buyers below 51 scaling in lower. You know, again, I still think the market is going to get to the 24 close. But the sideways trading from bars 44 to the current bar is a reminder that the market's probably in a trading range. And that will limit the upside potential. Now, if the bulls can get a strong breakout, you know, far above 46 and the 24 close, then we'll probably go for some kind of measured move. Maybe the measured move from the low of 50 here to the high of 46, projecting up. We don't have to stop at the 24 close. You know, the round number, the bulls, I mentioned this on the blog, the bulls want to get above the low 2 here. They want an upside breakout. And this could be the start. So if the bulls, one thing the bulls would want to not trigger the short, break above the high of Thursday, this bar, and go for a measured move up somewhere up to here. So that could be what the bulls are trying to achieve today. Bears obviously want the opposite, and they want the market to sell off back to the 34 high. So rally and then a sell-off. Leg up in a trading range, leg down in a trading range. This is a strong enough breakout to lead to a second leg. The But the longer this goes sideways through here, the greater the risk of a deep pullback and a test back to the 34 high. Now, bears that sold the 34 high, they had plenty of time to get out somewhere in here. But the bears that sold the 40 high never got to exit their losing trade. So they are trapped. A lot of them, I suspect, would exit on 41. But if this goes sideways long enough, we could easily just pop down to the 40 high, this red line, and allow these traders out. So that is the risk that the bulls face. Big bar on 53. But when you look at 53 and you ask yourself, is the market always in short? And you think, I don't know. I think the bears need, probably one more bar. And because of that, traders buy. And that's often right before a trading range reverses. So if this is going to be a leg in a trading range, you'll get a strong bear bar like 53, and then bulls immediately buy it and the market reverses. It's a sudden surge in momentum on a smaller time frame. If it's going to be the start of a bear trend, in other words, lead to a downside breakout and test the 34 high or the 41 high or the 40 high, then we'll get another strong bear close. So this is an important bar. This is an important bar. Can the bears get consecutive bear bars closing on their lows, or will the bulls be able to disappoint the bears and create a bull bar? 53 is a big enough bar closing on its low. It does pose a little bit of a problem for the bulls. The bulls need to undo the damage caused by 53. So the bears are hoping that we get something like this. Here's the top, here's the bottom, and they want a measured move down, taking us back down to here. And we don't know yet. Still 2.5 minutes left in this bar. Bears want to paint as big of a tail as possible on this bar. It's an inside bar. That will lower the probability of traders buying above it, but it is that follow through in a probably always in long market. So if you're a bear, what do you do about 54? Well, 54 is arguably a second entry buy with 50. Therefore, bears probably have to exit above 54, and bulls, always in bulls, probably buy again above 54. Top of a trading range, you always have to wonder about, so this is a bull flag, should get an upside breakout, but top of a trading range, you always have to wonder about the opposite, and a bear breakout below the bottom of the range. The bulls have yet to trigger the buy, so that is not ideal. And the bears are trying to get the downside breakout. But probably buyers down here. The bulls trying to get a reversal up from the bear breakout on 55, and the bears are trying to get another follow-through bar. All right, so reversing up, bear breakout on 55 and then 56. However, once we got to the target, we immediately reversed up. Good for the bulls, but fairly tight channel. That will lower the probability of traders buying above 57. The bears are trying to get an endless pullback, but to me, it's probably going to be a leg in a trading range. Bulls buying the 54 low, scaling in, made money. So that's good for the bulls, but fairly tight channel. The micro channel since 51 as well. Probably buyers below 56 and 57. Now it's possible we have a negative gap right here and another negative gap, and if the bulls fail to close above the 54 low, we could go a little bit lower. But right now, we still have 2 minutes left in the bar, and it looks like the bulls are going to get the close above the 54 low. So I still think the market wants to get back to the 24 close. Even though this doesn't look ideal, it's still a possible wedge bottom, 50, 54, and 56. So it's 3 pushes down. And it is minor. There is the risk of a downside breakout and a measuring gap right here. But with it being a wedge, that increases the odds of a few legs up. So this is an important area. Can the bulls keep this gap open? And if they can, that will increase the chances of the market rallying back up to here. So the bulls want to rally to the 24 close. The bears want a breakout below a wedge, 1, 2, 3, and a measured move down. Some bears sold the close 56, disappointed 57, tried to buy back shorts on the 57, 58 low. And that's in part why the market's reversing up. For me, if I was short, I would get out of shorts above anywhere really, certainly above 57. Too much risk. This is a wedge bottom and a test to support the 40 low, this red line, and the market goes for a measured move. And the market tests the 24 close. Bears trying to get a breakout below 56, wedge bottom. They want to break below and a measured move down, and they might get it. And the bulls obviously want a failed breakout, but 61 is enough of a surprise, probably going to go sideways here. The size of 61 is not ideal for the bulls. The sell-off, probably, they're bulls that are trapped, and I suspect any pullback, some of those bulls are going to sell out of long. So there might be more sellers on any pullback intra-bar than buyers. But we could still reverse up here. So it's possible 61 is a trap. Bears trying to get the reversal down. 3 consecutive bear bars breaking out below 56. So you have to wonder if the market's going to try and test the open of the day. So strong enough breakout, probably going at least a little bit lower. If the bears are lucky, we'll get down to the open of the day and possibly yesterday's low. Stop entry buy on 63, but big tail above. So lowers the probability to buy, especially after 3 consecutive bear bars, but probably not going much lower. So I suspect bears that sold the 62 close are disappointed, and they'll probably look to buy back shorts here. So we could easily rally up to the 24 close, and this might be the start of the rally, but with the 3 consecutive bear bars, probably more sideways. Consecutive bull bars increases the chance, and you can see bears are giving up. So probably going to get to the 24 close at a minimum. In general, in situations like that, when you see 63, a lot of traders will wait for one more bull bar. And when 64 closed above its midpoint, the rest of the remaining bears gave up and bulls started buying again. We don't have to stop at the 24 close. There are other targets above. And so far, this breakout looks pretty good. Pulling back to 50% of the bar, not ideal, but strong enough surprise on 65, probably at least a small second leg up. Still above 65, disappointing, but 3 consecutive bull bars, probably buyers below 65, or at least a small second leg up. I still think the target is the 24 close. So probably going at least a little bit higher. But 65 is a warning that something is wrong with this rally. Market's in a triangle. say it's 3 pushes down, maybe 1, maybe here's the bottom, and then the top, something like that. Breakout mode, and we're getting late in the day. So if the bulls or the bear, if there's going to be a swing, it needs to happen fairly soon. It doesn't really matter how you draw it. Some will draw it right here. But either way, tight trading range, breakout mode, and the bulls have a 63 to 65. They want that to be a strong enough rally for a second leg up. And the bears obviously want the opposite. But right now, not clear. And until there's a breakout, it will likely remain unclear. For the bulls, it's a micro double bottom with 69 and 70. It's a second entry buy with 67, and the bulls want a second leg up from here, leg 1, pullback, and leg 2, and they also want to get to the 24 close. So if this bar closes on its high, that will increase the chances of the market getting a rally into the close. Disappointment bar for the bulls. The bulls, they got a bull bar closing on its high on 70, but top of the tight trading range, and then the market tried to go outside up on 71. And typical of the trading range, buyers below 70, buyers below 69. The bulls have a chance to get an upside breakout, and with the market being always in long, from 33 to 46, I suspect the odds slightly favor an upside breakout if we're going to get a buy the close rally or sell the close finish. So to me, we're getting around that 230 bar 72 window where we really need to get the bulls need to get a swing trade going pretty soon, or else we're probably going to go sideways for the rest of the day. Micro double bottom, 70, 71. Bulls trying to get the upside breakout so far. Looks pretty good. But let's see how this bar closes and how the next bar looks. 72, enough of a surprise. Probably going to go at least a little bit higher. So I suspect probably going to try and get a swing to the upside going into the close. But tail on top of 672, disappointing. Let's see if the bulls can get follow through. So this is an important bar. So it's a swing buy, stop below 71. And if you are long, you're betting on a buy the close rally. Probably always in long. For the bulls, probably a stop below, maybe 2 or 3 points below 73. And if this bar is a bear bar, most of those traders exit. The bears want to double top with 65. However, the channel up's getting pretty tight from the 71 low. Therefore, and we're running out of time. So I don't know if it's worth shorting below this current bar if it closes on its low. It's definitely worth exiting longs though. I like to think of these as kind of those, be dumb and don't think about it trades. If you buy the 72 close or the 73 close, you just trailer your stop below a bull bar. And most of the time you're going to make a little, lose a little, and occasionally you'll get an upside breakout and a buy the close finish and do really well. And, I say most of the time you make a little, lose a little. If it's truly a credible buy the close rally where you enter, you'll generally make at least a little bit each time. So here, the problem I have with it is it's fairly disappointing. A bear bar, a doji. Probably buyers below, but not really all that clear. And that bar it might be similar to yesterday's bar. Grabbed the wrong mouse. Similar to 58 yesterday. May go a little bit higher, but probably not much higher. So 74 is certainly disappointing, and it's a reminder to traders that something is not right here. So probably buyers below 74, but probably not going all that much higher. I wouldn't be surprised at all if we rally to the 24 close and get there in the final minutes of the day. It's really common for that to happen. And, where you get a rally and you get a sudden breakout in the final, 5 minutes or 10 minutes of the day that test the 24 close. I suspect we'll probably try and test it before then. We've got about 7 bars left in the day. 4 bars, 19 minutes, so 3 bars and 4 minutes until the 4 p.m. Eastern time stock exchange close. So 74, still by the close, but on 74 you have to ask yourself, there's something wrong with this breakout. Well, there you go. I had to step away for a few, but we touched the 24 close. And this is kind of what I meant. It's fairly common to get a rally late in the day, and in the final few bars test an obvious form of resistance. I think the market's always trying to trap you and get you to do the wrong thing. One moment. And what better way to do that than you get a, late, you get a buy the close rally, doesn't look that strong, and it's getting late in the day, and hard to hold later in the day, and then the market breaks to the upside. Daily chart, and by the way, I've got the question box open. Feel free to ask questions. Daily chart, we had a second entry short, and it didn't trigger on the day session. You could technically argue that it triggered on the ES, just the Globex session. So here's the Globex session, outside up, and the bulls want, so back to the day only, I see it the same way, and the bulls want an upside breakout. So why don't I follow the Globex session? Or better yet, why do I use the .D instead of just using the ES.D? And in part, wrong index. For me, I like to follow, I pay attention to stocks, and I like trading the SPY pretty frequently as well. And I like how, even though you can argue there's missing information, I like following just kind of the U.S. market. So to me, the day only, ES.D, is basically the cash index. And so that's kind of why. And obviously, Al's always done it that way. I kind of learned from that way, so it just makes sense to me. But you can see the same thing from the Globex. So a measured move up to here takes you back to the kind of apex of this area right here. Takes you above 4,100. I think this is the more important price, the March 6th low. Obvious target where bulls got trapped, and I think we're going up there. So for me, that is an important target. Let me do that. And you can see on the Globex, same thing. Measure move up takes you right to the apex of this area. So good bar for the bulls. It's an inside bar. possible final flag, probably. What do you do here? Well, you can bet on the upside breakout, or you can wait for 2 or 3 closes. That'll increase the probability. But this is a problem for the bears. It's still possible the bears get a wedge, 1, 2, and then 3. You always have to wonder, when you have an obvious bull flag at the bottom of the range, you always have to wonder if the market is going to break to the upside. So on the day as a whole, you can argue it's kind of a trend from the open, and most trend from the opens form wedges. So 1, 1, 2, 3, or 1, 1, 2, 3. Wedge top, and you expect a couple legs sideways to down. And the bears try to get an endless pullback, but this channel is so tight that the odds were the market was going to form a trading range. I thought this was somewhat low probability, and the market should have had a second leg down. So this trapped a lot of traders, and you can see the bears should have gotten a second leg down, and they failed here. And this bar trapped quite a few traders, and if you draw a line, send it to the right, you'll notice that it became fairly important support. This should have been resistance. The bears were selling, and this level broke, and the market went to the upside. And here, 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 all these tails tried to break below and failed. First bar of the day, big bar and big tail. You can argue it's a wedge, 1, 2, 3, but it's a really big tail on top, small body, probably buyers below scaling in lower. In general, on the open, better to wait for consecutive trend bars up or down. Therefore, wait for bar 2 to be another big bear bar. The size of bar 1 alone will lower the probability of traders selling below it. Therefore, probably buyers below. If you think about it, the market rallied and then it sold off. Bar 2, doji bar, the market broke to the downside on 1 and then reversed up on 2. So now you have a stop entry short and a stop entry buy. Big tail, small body on 1, bigger body, but tail above on 2. This will lower the probability for the market and increase the probability of the market falling. In other words, buyers below 2, buyers below 1, sellers above 2. And bears sold above 2, made money. Some bears sold below 1, sold more above 2, and they're getting out right here. Bar 4, outside, almost outside up. Second entry buy with 2, but just like the bears on bar 1, bears sold more, got out right here. Guess what the bulls did? The bulls, they bought above 2, they bought more below 3, and they're getting out. So everybody, if the scale-in traders can do that, what does that mean? Well, if I'm a limit order trader and I'm fading breakouts, I bought below 1, made money, sold above 2, made money, and I bought below 3 and I've made money. So I've made money fading every breakout. That's a limit order market. What about selling above 4? Not really ideal. It's a big bull bar closing on its high. There will be traders that will fade everything, but bar 4, it's a micro double bottom bull bar closing on its high. That will increase the chances of an upside breakout, which is what happened on 5. Bad follow through on bar 5. Bears selling the high of 1, selling the high of 3, and making money. Probably more of a limit order market, but probably buyers below 5 scaling in lower. 8, bulls bought the low of 7, and the market, 6, bulls bought the low of 5, market's turning up. Breakout pullback buy for the bulls, but top of the trading range overall, and probably going to pull back to this area in the open of the day. The one thing, and this is worth writing down, I'm always thinking about on the open is trend from the open. Is this forming a trend from the open? For me, naturally, I like limit order trades, counter trend trades. That increases the risk of some kind of breakout, which traps counter trend traders. Also, whenever you want to find a strong breakout, figure out who's trapped on the trade. Traders that sold below here, traders that bought below this bar and more lower, they got trapped and the market sold off. Better example is this. Bulls bought the low of 8, bought the low of 7, anywhere in here, they got trapped very quickly and the market sold off pretty aggressively. 7, upside breakout. The market is forming a fairly tight channel. Bears not making money below bars. 7's a little bit of a surprise, probably going at least a little bit higher. So you can argue buy the close, but the market's gone up, deep pullback, up, deep pullback, up, deep pullback, and up. So it's 3 pushes, 1, 2, and 3. And a possible second leg trap, leg 1, complex pullback, and then leg 2. Therefore, you have to wonder, what's the follow through going to look like? And this was the follow through. But this channel is so tight that a lot of traders are buying, if they bought the close of 7, they're buying more below 7, which is why this bounce happened. And I want to explain it for just a minute. So there's 2 things to think about here. One is it's a tight bull channel. Odds are the market's going to go sideways. So some traders buy the close, and as the market goes down, they're disappointed. They buy more. The sheer size of this bar, think about the logic right here. What would it take for this bar here to buy above it? In other words, the size of this bar, this bear bar, bar 8, is so big that there's probably going to be sellers above. So if I'm a bear, the market went from here to here rather quickly. Therefore, you're probably going to get a second leg down. So if I'm a bull, that drastically reduces the probability of buying high 1. High 1 buys, another thing to write down, are great buys in leg 1s, which are strong breakouts. And really, leg 1s within a strong breakout. High 1 buys are great. The majority of the time, high 1 buys are not great because most high 1 buys are at the top of a trading range, leg 2 or leg 3 of the channel, which is the start of a trading range. You know, it's kind of like down here. So we have a low 1 short, I don't know, pick a place. We broke to the downside, we're pulling back, maybe a low 1 short below here. Or an easier example, we didn't really get any good low 1 shorts here. You know, maybe let's be traditional. Let's say this is a low 1, below 18. But 18 is following a tight trading range. So is this a breakout or the start of the channel? It's probably the start of the channel. So if I sell below 18, I'm going to get a deep pullback. Why? Simple. Because this bar alone is a pullback. However, the size of the bar is big enough that there's probably buyers below scaling in lower, and we're going to get a second leg. Same thing here. Low 1 short below 17, but 16 is big enough, I expect a second leg up, so it doesn't trigger. I want to find an actual high 1. So here, very strong breakout. And the odds are we're going to get some kind of measured move. So if I buy above any pullback, I can buy above a bear bar here. I'm probably going to make money. And the market's probably not going to pull back that much. So selling above this bar, not ideal. Here's a high 1. What about buying above it? Well, I could buy above it, but what's the problem with it? The problem is if I'm buying above this bar here, it's a breakout and it's a pullback. It's at this day it's a trading range day, and we've gone sideways for 3 bars in a row. There's probably more sellers above. So when I see high 1s, I'm always measuring high 1s from the standpoint of how strong is the rally. Is it a leg in a trading range, or is it a strong breakout? If it's a leg in a trading range, then I typically do not want to sell. I do not want to buy above the high 1. So for me, when I look at this bar, I know it's going to form a high 1 on the next bar if there's a bull bar. Therefore, I know that unless the bar is absolutely perfect, there's probably sellers above. So I might as well, that's why traders look at this and they take profits. Bulls buy the close, they buy more below the bar. Here's their average entry. And as this bar is going up, a lot of traders, they scalp out. Other traders just buy this close. And they buy this close knowing that there's going to be a high one that's probably going to be bad and it's probably going to get sold. However, if I buy the close of this bar, I'll probably make a few points before the market goes lower. And that's what happens. Doji here, it's a pullback, so it's leg one. Remember, traders sell high ones, which is this bar, because they expect a second leg down. Most pullbacks are two-legged. So here's a rally in a trading range. That's a high one. Well, leg one, that's the pullback against it. And then leg two. An easier way to say that is most of the time when you get a rally, you're going to get a two-legged pullback. Leg one's the bear bar, the mark one above the bear bar, and down, and that's leg two. Breakout to the upside, expect a two-legged pullback. Maybe that's leg one, pullback, and that's leg two, or maybe this is leg one, pullback, and leg two. Breakout to the upside within a trading range, I at least expect a two-legged pullback. That's the first pullback, went above the market, and that's the second. The key word is at least. Bear bar on 10, closing below the past 3 bars. Almost outside down, testing the moving average, getting close to the open of the day. We had a doji on 9, and that'll be a magnet for traders. So the bears that sold the close of 7 over here, and as the market sold off, what did? They scalped out. Well, the market's breaking out to the downside. So what do you think bears are going to do? They already scalped out here once. Typically, moves get weaker as they go on. So to me, probably disappointment here. And that's disappointment. Tight enough channel, probably buyers below, and we got a two-legged pullback. Bulls started buying at the moving average, and the market reversed up. 11 is a surprise bar. It's forcing traders to buy high in the trading range. You will have bulls buying the close of 11, and if they're buying, they want the market to race up quickly. If it starts to stall for too long, a lot of traders will be quick and take profits. 12, follow through. 13, another follow through bar. Body is getting smaller, but it's at least consecutive bull bars and probably going to try and test yesterday's high. But this is not ideal follow through. And you can see the market broke above 8 here and started to turn down. So 12 and 13 was a warning for traders that bought the 11 close that the market was probably going to pull back soon. 14, you can argue a wedge, 1, 7, or 8, and then 14. Reasonable to exit longs below the bar and look to buy again, but tight bull channel right at 50%, not really ideal. But you can see, strong enough bear bar, probably going to get a second leg down. So as this bar turned up, what did everybody do? Since everybody's expecting a second leg down, they scalped out. And the bears got a small second leg down that went below the 15 low. But 15 is a bad low one short. So therefore, I'm trying to think of a better way to put this. If you're long right here and you have a big bear bar, I'm long, let's say I'm long, I'm trapped, and I'm thinking, this is probably, there's going to be buyers here, it's 50%. However, it's probably not going to form a good stop entry buy. Therefore, as this bar is going up, maybe I should take profits just in case we crash down to the 11 low. And when this bar closes, what do traders do? They say, yeah, it's a doji. I mean, there's probably sellers above, but there's probably buyers below, because if the market goes below 15, it's a two-legged pullback. Leg 1 down to 14, pullback on 15, leg 2, and that's why everybody bought and the market went outside up. 16, big bull bar closing on its high, but big bars today have led to climactic pullbacks. Therefore, probably not that great of a buy. Above 15, probably better to wait, above 16, probably better to wait for follow through. But 3 pushes up, you have to wonder if the bulls are going to get an upside breakout. 17, bad follow through, but tail below 17. It's a possible pullback from the 16 breakout. And 16 is enough of a surprise, probably buyers below for at least a small second leg. 18, bull bar, closing above 17, good for the bulls. Is it by the close? It might be. We have a small negative gap right here. So you have to wonder if we're going to get some kind of measured move up from the low of 11 to the midpoint, or the negative gap here, and then the measured move up to here. Why didn't I choose the low of 4? Generally, I like to choose the closer target, and if it reaches this target, I'll look for the next one. And 19, big bull bar. But look what we're testing. We're testing the midpoint of this bar right here, and there's probably going to be sellers in it. So bulls, they expected a second leg after 16. They got a pullback. 18 and 19 is that second leg, but 19 is a pretty big tail. That will increase the probability of the market going sideways. So bulls are scalping out at new highs rather than buying aggressively. And if they're scalping out at new highs, that means that the upside's probably limited. 20, an inside bar, probably going to go sideways here. Give me just one moment. Sorry about that. So we're rallying, but we're going sideways. That increases the chances of the market pulling back soon. To me, this looks like a leg in a trading range, but fairly tight channel. Another short below 20, inside bar, triangle, low probability short, but the market, bears are starting to make some money below bars, and that will increase the probability of the market going sideways more. Doji, 22, micro double bottom, so it's a high one buy above 22, probably sellers above, but it's a micro channel from 20 to 16, so it's basically a 5-bar micro channel, and that increases the odds of a second leg up. 23, 24, upside breakout, best looking bull bar of the rally, several buy climaxes here, 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 and here. Whenever you get consecutive buy climaxes, the odds are the market's going to go more sideways. And then 25, another bear bar, bears sold above 23, scaled in higher. Price touched the 23 high during 25. So bears starting to make money selling above bars. 24, probably exhaustion, and you can see it was out in 25. Always in traders probably get out below 25. This looks like a leg in a trading range, and we're probably going to test the moving average soon. 26, 27, bear bar, doji, and then another bear bar, 2 legs down, but a micro channel since 24, probably sellers above, and reasonable for bears. Aggressive bears will start selling, and bulls, reasonable for bulls to exit. And then 28, another bear bar. 29, testing the 22 low, bottom of the third leg. That was a reasonable magnet. You can see some traders bought the 24 low here, bought more lower, and the market tested the 24 low. But this is a fairly tight channel, and a lot of traders will exit due to the risk of the second leg down, and the market kept selling off. Doji, 31. Bull bar, and it's a sell to close market. Whenever you get a doji in a sell to close market, it's typically a warning that the market's not going to go much lower. In this case, the bears got a bear breakout. Strong enough bear bar, probably at least a small second leg down, and probably going to test the open of the day and the moving average right here. But 32 is the best looking bear bar at support, so probably not going much lower. And then 33, a big bear bar, touched the open of the day and immediately bounced. Tested the 10 low, or the 10 close right here, and turned up. The tail on 33, it's also consecutive sell climaxes here, here, and here. With 33 having a big tail, that will increase the probability of traders buying back shorts below 33 or on a pullback. So bears probably disappointed that sold anywhere in here. So probably going to bounce in. One obvious target is the 31 low. What about selling the close at 33? I would not. Probably going to pull back here. Then 34, the doji. But doji's, it's low one short at support. And remember what I've been saying about low one shorts at support at the bottom of trading ranges. Typically, there's buyers below. And then 35, it triggered a buy above this sell-off, but it's a micro channel from 34 to 24, so it's basically 10 bars. Yes, sellers above, but it's an extended micro channel in a trading range day, so you have to expect traders are going to be disappointed. And then 36, another bull bar. Reasonable for traders to start buying back shorts somewhere in here, because we could easily get an upside breakout, tight enough channel, and a sell-off. So this is a trend line break. You have bull trend line break. Bears probably need a lower high major trend reversal, so we could get a fairly deep pullback before the bears get a second leg. At this point, the odds are we're going to get a second leg down from the sell-off to 33. Now we have 4 consecutive non-bear bars, 3 consecutive bull bars closing above their midpoints. Probably sellers above, but not going. Probably won't go much lower, at least for the near term. This is the disappointing rally, so probably buyers below for at least a small second leg. And then 38, another bull bar closing on a tie. It's a pretty strong reversal, and that will limit the downside. And because of that, you have traders buying. You always have to worry. You always have to wonder about an endless pullback. 39, bear bar. You can argue it's a wedge, 1, 2, 3, but it's a tight channel, so it's parabolic, probably going to be minor, increases the odds of an upside breakout. And then 40, we broke above 39, pulled back, and then 41 obviously broke to the upside. And the market's trying to get a bull breakout of the bear flag. Way to bear flag, 33 to 39, to 40, and the bulls are getting an upside breakout. 41, is it by the close? It's probably by the close, but probably not going all that much higher. 42, the doji bar, probably traders, you can buy the close, traders buying the close, buying more lower, probably going to get to the 24 low, 25 low, and the 24 close. But tight bear channel, probably going to get at least a small second leg down first. Big up, big down, big up, probably going to go sideways soon. 44 got really close to the 24 close and started to turn down. The tail on top of 44 will increase the number of traders taking profits up here. And then 45, an inside bar. 46, it's another bull close, tight bull channel. So you had a micro channel lasting about 10 bars, and then another micro channel lasting more than 10 bars. So you have a climactic sell-off, climactic rally, increases the odds of more sideways. 47, a bear bar, and then 48, another bear bar, probably sideways in here. What about buying the close of 48? You can, but the problem with buying the close of 48 is you're buying after an extended micro channel, and there's obvious support down here. So if you're buying, you have 2 choices. You have to be either really quick to exit, or you need a really wide stop, probably down here, and better if you can scale in lower. And that's what happened on 48. Traders bought the close and scalped out. Traders buying below 48, scaling in, and you can see they scalped out here. But the bulls, it looks like the market's forming more of a trading range. Traders sold high of 50, scaled in higher, made money. Traders buying below 51, scaling in lower, making money. Then we have a surprise breakout on 53. 53 might be a give-up bar. Whenever you see a bar like this, it's kind of like what I was talking about with 8. You have to envision what's the next bar going to look like. It's a big bear bar, and what would you need to see in order to buy on the next bar? You probably want a bull bar closing on its high. But when you look at 53 and you think, I don't know, 53 might be a big enough bar, and it may get a small second leg down. Therefore, it might be a bad stop entry above this bar. And then you get 54 with the big tail, and it didn't trigger. So why didn't it trigger? Well, it was a bad stop entry buy. You had traders that bought in here, disappointed on 53, and they used this bar to take profits. 55, trying to break below the 54 and 53 lows. A little bit of a surprise on 55, forming a tight channel, increases the odds of downside breakout, and then 56 bear bar. So the bears are trying to get an endless pullback, but now they're at support. 50%. It's a 50% pullback from the low of 33 to the high of 46. Would you consider a sell on bar 53 as top of the trading range? You know, some traders will take that sell here and scale in, but to me, the problem with selling the close here is probably going to get bad follow through. It's two legs down, leg one, pull back, leg two, and that's what happened on 54. But the bulls that bought this area and bought more on 53 were disappointed, so they used 54 to exit, break even, and that's why traders sold up here. But anyways, 56, it's 3 pushes down, 1, 2, 3, testing the 40 high. Probably not going to go all that much lower. And then the market, some traders bought the close at 56, and other traders bought the low of 50, more lower, and you can see the market is allowing limit order traders to make money. But what do you notice? We have negative gaps here and negative gaps here. That'll increase the probability of lower prices. 58 tested the 56 close. Some bears sold 56, disappointed on 57, and 58 tested that close, and the market's bouncing. Tight bear channel, so that will limit the upside and make it more likely to be a minor reversal. 59 bull bar, and you think about it, the market went up on 57, down on 58, and then up on 58 and 59. It's a two-legged pullback in a bear trend. Bear trend being the start of 46. So if I go to 1325 on a 1 minute chart, I bet we can find it here. There you go. So we have a bear trend all the way down to here. And we have a two-legged pullback. Leg one, pullback, leg two. And the market sold off. So whenever you get something like this, rally, big tail below, and then a rally, and the market starts to stall, traders can be quick to exit. It's a micro channel since 56, so it's a 1, 2, 3, 4, 5 bar bull micro channel, and probably buyers below 60. But if this is the leg in the trading range, in other words, there should be buyers below, and this should get a second leg up. But if this is going to be a leg in the trading range, probably buyers below down here, scaling in lower. And if that's the case, traders may get trapped. And you can see the market tried to trap the bulls. Bulls bought this low, scale in. They used this pullback to exit longs, and the bears got a second leg down. Strong enough breakout from 60 to 62, probably a small second leg down, likely. But we're at support. Bears sold in this area, got trapped on 41, and it's 3 pushes down. 1, 2, 3. And while it might be a sell to close bar, if the bulls get a strong bull bar closing on a tide, we could quickly reverse up. And 63 was that bull bar. It's also a second entry buy on a smaller time frame. The market went down on 61 and up on 61, down on 62 and up on 63. Tail above 63, 4 bar micro channel, really 5 bars with 59. Probably, there's probably sellers above. I would certainly exit. It's reasonable to exit longs above 63. And if 64 is a bull bar, as it was, you'll have more traders buying, and that's what happened on 65. But because it's a 5 bar micro channel, 1, 2, 3, 4, 5, you'll have some bears sell the high of this bar, or the high of this bear bar, and the high of this bar, betting that the market is going to go more sideways. And you can see that's what happened here. Bears sold, they sold more, and this bar, look what happened. Even the traders that sold the 63 high and more higher made money, which is very typical in the trading range. This is also a tight trading range up here on it's basically a triangle. So in other words, we have what should have been a bull flag, and you'll have bulls buy in this area, betting on an upside breakout, and instead we got a downside breakout. And you'll have traders that'll use this tail to sell out of longs. Strong enough rally, 63, 64, 65. Probably buyers below at least a small second leg up. I still think we're always in long from this rally here, and we're probably going to get to the high close, bar 24. I won buy, 3-bar micro channel, but probably sellers above in a fairly tight trading range. Bear sold, and then the bulls got a second entry buy, but a doji. Probably bulls bought above this bar. They'll probably buy below this bar, which they did here, and they used this bar right here on 70 to take profits. So tight trading range. The bulls tried to get a buy the close rally. I mentioned here it's good for the bulls, but it's disappointing. Bad signal bar here, bad stop entry above this bar, big tail, another tail, disappointment bar, and then a doji. So this looks like it's not going to go all that far. And then the bulls went outside up, and they finally got to the 24 close at the end of the day, and the market went sideways. So overall, typical trading range day. For stop entries, I thought the first reasonable stop entry was buying above 4, a micro double bottom with 4 closes above the moving average. Not ideal because of the size of the bar, forcing you to trade in the middle, in the upper portion of the opening range, but okay buy. And for me, tough call. I mean, if you buy this close, you can hold through this, or a lot of traders would probably just exit below 7. Big enough bear bar, probably small second leg down. But if you do that, you got to buy again here. Whenever you're trading with stop entries, and a lot of times, if the market's in a reasonable swing trading market, a lot of times you can buy above a bar, exit below a bar, and re-enter. So, like for example, you sell any of these bars, you get out here, and it doesn't really let you back in. That's because the market's in a trading range. But you can buy above here, you can sell below here, and then if you exit along below this bar, and then you buy again here, you don't really lose anything. But when the market's in a fairly confusing market, a lot of times what happens is these are sell vacuums. So you have traders that are dragging their orders lower. So in other words, the market's falling because nobody wants to buy up here. And then as soon as it hits a price level like below 7, everybody starts buying. So the point I'm making is it's generally not really that great of an idea to exit longs below this bar or on this close, because you're exiting at the bottom of a trading range. And often traders fade. Often traders fade big bars. But if you did exit, probably buy again above here. And, if you exit below that bar, not really ideal. So this is clearly a trading range day. The market's forcing you to, if you don't buy with limit orders, you end up buying too high and suffering a pullback. So as far as what do? I don't know, you probably buy above here, and then maybe you get out below somewhere here. If you buy here, would I get out below 14? I don't know, probably not. It's 50% pullback, better to wait for one more bear close. The bears don't get it. And probably buyers below here. I would certainly get out below 25 consecutive buy climaxes in a trading range day. If you don't get out below 25, you get out below here or here, and then the market sells off. And always in short, bears exit above any of these bull bars. Aggressive bulls start buying, or they buy the 41 or 42 close. And traders, what do? If they don't get out early, you cannot get out down here, unfortunately. But this is a trading range. And with all these tails above, traders suspect that gaps are going to close. And that's why traders quickly start to exit, and they buy the breakout points. So not really ideal for always in trading. Maybe you get out below this bar, or I don't know, maybe you get out below 52 or 53, but if you do, you probably have to buy again above 58, and then you get out below 60, and maybe you buy again above 62. But that's really, really hard to sit through a swing trade when you're getting all this overlap. So better to look to trade with limit orders. For limit orders, I talked about it. It's buy below 1, sell above, buy below this. Traders selling any of these highs, making money. Buying any of these lows, making money. Traders selling the close of this bar, scaling in higher, making money. And traders really didn't get trapped on the way up. Bulls, what about buying below these lows? I would not. Consecutive buy climaxes. Expect 2 legs down, so tight bear channel. Some bulls will buy X number of points below 31 because 31 is a doji, and the odds are it's going to retest it, but that's still pretty aggressive. Whenever you have a channel and the channel looks like a leg in a trading range and the open of the day is not far away, the market will often test it. And then all of this was limit order trading. Buy the close, sell the close. Not really buy the close or sell the close anywhere in here. Maybe you buy the close 11 or 12, but that's buying at the top of the trading range. You had bulls, bought this close, disappointed here. Do you really want to buy again on the retest? Probably not. If this is going to be a strong trend day, the bears should not have allowed this. Therefore, bulls are trying to buy pullbacks and probably sell the close in here. I would use this bar. You can sell this bar, but then if you do, better to be quick to take profits. And then not really clear buy the close until probably 41 or 42. And then you can argue buy the close in here, but top of the trading range, I'd be pretty quick to take profits. And that's pretty much it for the day. Let me take a look at questions real quick. What are the key levels you keep in mind before you start your day? Which support and resistance are important to you in the beginning of the day, and which ones do you look at to be your target? Well, for me, I always look at yesterday's high and yesterday's low, and other than that, I try to keep it pretty simple. Yesterday's high, yesterday's low, the open of the day, always an important one. And I'll look at kind of just basic things on the daily chart. But you don't need any of this. Just pick a random day. So here's a day. That's 4,000. So let's see. Let's go to okay, so big bar. So what happened on this day? Well, we have a triangle here. We broke above the triangle, and we're selling off. So logic would say, yeah, it's a sell the close bar. And it probably is a sell the close bar, but it's a gap up, and you have bulls, you have bears that are trapped that sold any of these highs on the way up. So they may use this bar to take profits, but I wouldn't buy the close of this bar, but I'd be hesitant to sell it as well. And then what do we get? Well, disappointed bears buying back shorts. So bulls, can you buy above it? Maybe, but big enough bar, probably second leg down, got the second leg. Then we have a big bull bar. So traders are clearly, this is probably a trading range day. If it's a trading range day, I'm going to draw a line here because I think the open today is going to get touched, which it did. Strong enough breakout, follow through, probably buyers below, scaling in. We got a bull bar, so now it's clearly a bull trend, but it's climactic. Still going to pay attention to the open, but no reason to sell. Probably buyers below, scaling in. And eventually the market's going to go sideways. And when it goes sideways, this bull breakout is going to lose importance. And what's going to gain more importance is this trading range. And I'm going to think, gee, this may test the open of the day. Maybe it's a trading range day. And there you go, tested the open of the day. So that's kind of how I look at it. And then for me, I think this whole thing's a trading range. This gap closed. Well, where are some bear gaps? Here's a low. Here's a high. If this is going to be a trading range day, this gap should close. So when the market starts to stall, notice how it creeps up into the gap and it closes the gap. But then bears start selling the gap because bulls bought in here, disappointed. the market retests the gap and traders take profits, and then the market turns back down. So that's kind of how I view support and resistance. And I don't mean to be confusing with that, but if we just go to like any day, here's a day, and the market's going sideways. Yesterday, big sell climax, so expect a couple hours of sideways. Here's your, maybe a couple hours, 2 legs up, and the first thing I look for is a dominant feature of the day, big bear bar, big follow through. So we're probably going to be in a bear trend or a trading range day. Sell to close, second leg down. Now, consecutive sell climaxes. This looks like it's a pullback, but it's starting to kind of be fairly strong. So for me, I would exit shorts because I don't want to face an upside breakout, and we may test this low right here. And the market's starting to stall. And then, you get a breakout, follow through, and it looks like it's just going to be a trading range. So anyways, I hope that's helpful. I hope I didn't just be more confusing with explaining that. But to me, I keep it really simple. And was 40 a good buy the close? It's reasonable. If you're buying the close at 40, what are you thinking? Well, to me, I'm thinking strong enough bear bar, probably sellers above for a second leg. And if I'm a bear and I sold anywhere, I'm getting worried. I sold, I scaled in more. Why are we getting a tight bear channel against me, tight bull channel, and I'm unable to exit my shorts? Maybe because I'm getting squeezed. So whenever traders start to get trapped, traders sold this high, they scaled in, the market didn't let them out. Sold this high, they scaled in, clearly didn't let them out. So there you go. 40 is a good buy, 41 is a good buy, probably going higher. Well, I'll answer that in a second. Hi, Brad. So I noticed we have an II today closing near its high on the daily chart. Would you look at this as bullish on the daily for the upcoming days? Yeah. We have inside bars, breakout, inside bars. The bulls want an upside breakout and a test of the March 6th low. The bears want a failed breakout and reversal down. So to me, it'll be interesting to see, can the bulls get an upside breakout and follow through? Or will the bears be able to prevent this? So that's kind of my thought. My hope is we get the upside breakout and measured move. But who knows? High 1 and high 2s. The question, high 1 and high 2s are always after a bull breakout? Yes. Similar for low 1 and low 2 after a bear breakout. Thanks. Yeah, so a high 1, I'll add one thing to that. High 1s and high 2s follow bull legs. So just go to a 5-minute chart, just keep this easier so we don't have a lot of gaps. Okay, so we have a sell-off. Better yet, go to like something simple. Here we go. Here's a rally. It's a bull rally. So the first reversal down is a low 1 attempt. It's the first reversal down. And then we try to resume the trend here. And that's a high 1. We try it again here. High 2. Try again here. High 3. The problem with all this is you start to get nested patterns because the markets are fractal. And to me, I would go back to, go to the videos, but in general, I try to kind of give a little bit of leeway with leg counting, depending on the day. So for this, it's a strong bull, it's a strong breakout, and the first reversal down is probably going to fail, so buy above it. Here's a high 1, and then 20 went to a new high. So technically 21 and 22 is another high 1. And then 24 went to a new high. So technically 25, 26, high 1. 27, new high. Technically a high 1. 28, new high. And then it reversed down. And you got a second leg down. But to me, it's a rally. pull back, and then a second leg down. Even though these are higher lows, that's a high one, that's a high one. You can argue that this is a sell-off, that's a high one, and then we sold off, and maybe this is all leg two. We rallied, sold off again, so maybe a high one, high two. Or you could say sell off, pull back, that's a high one, sell off, pull back, high two. Or you could say sell off, that's a high one, sell off, that's a high two, sell off, that's a high three. It doesn't really matter. You know, in general, the reason why high ones and high twos and wedge bottoms and wedge tops work is the market gap down and it tried 3 times to sell off and it's failing. So expect 2 legs up. Or the market sold off on bar 2, rallied on bar 3, sold off on bar 4. It's 2 attempts down and it's a second reversal attempt. It's probably going to go a little bit further. Another reason is, and again, I hope this isn't confusing, traders sold during 2. Therefore, some traders will sell during bar 2 and sell more during a second reversal attempt. And they'll use that to get out of their first entry. Here's a great example of a high 2. Low 1 short, gap down, traders sell it, even though it's a bull bar, and then we rallied again. Second entry short, so it's a second attempt to reverse the trend, and then the market went lower. But again, go to the videos and study that. What characteristics stand out to search the encyclopedia with today? Yeah, so, I would start with trend from the opens. Let me do it like this. Let me do it like this. I will turn the screen back on in just a moment. So the way I use it is part 6. This is gap down, trend from the open, up, band reversal. So I kind of look at it. Here's gap down, bull trend from the open, strong trend. Today doesn't really look like this, doesn't really look like this, not like this. So maybe what do gap down, bull trend from the opens and reversals look like? Rallied sideways. Here's a trend, doesn't really look like that. And then it kind of looks like this. Not as great, but we rallied, sold off, rallied, sold off. And you can see a lot of days, trend from the, here's a good example. We rallied, deep sell-off, back to these lows, second leg trap, and then we reversed up, back to the high close. Rallied, deep sell-off, sideways. Rallied, very big bar, went far below the lows. The other things I'd look for is, maybe sell climax or bear breakout, deep pullback, try to get a second leg down, buy the close rally, deep pullback, test the high close. That's kind of how I would see it. But to me, I would try and think about how you'd categorize the day. This is a bull leg, it's a leg in a trading range. Expect 2 legs down, probably leg 1, deep pullback, leg 2, or maybe it's leg 1, pause, leg 2. So I hope that helps. I know I'm kind of not really explaining it that well, or you could say trading range day. We have a large triangle, bar 4, 33, and then here, and a bigger triangle here, here, and here, ultimately led to reversal up. So I hope that helps. All right, so tomorrow will be interesting. It'll be interesting to see if we gap up on the open tomorrow, and if the bulls can get a strong upside breakout. They have a reasonable attempt at a measured move. I think we'll probably try and test 4,000 in the next couple of days, if not tomorrow. All right, hope everyone has a good rest of their day.